required. Terms apply. See tescomobile.com/terms.
Ah, Christmas. A time for celebrating, unwrapping and unwinding. Capture every moment with an epic iPhone 6s with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
Biggest bulls just got even more bullish. He explains why on tradingnation.cnbc.com. More Squawk on the Street is coming up.
You know that tech stock we talked about?
Wow, that was the most beautiful bit of film I've ever seen.
Eh?
What performances! Did you see the pups' faces? They loved it.
But
Such emotion, such intensity.
Sergey, it was an advert for snacks.
I don't remember the last time I felt so moved.
Oh, boy.
Oh,
Enjoy 2-for-1 cinema tickets from Meerkat Movies when you buy through Compare the Market.
Qualifying purchases Tuesdays or Wednesdays. Participating cinemas. 2 standard tickets only. Cheapest ticket free. T's and C's apply.
Along the goal line, scores! It takes it home!
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
And you can hear the action live on TuneIn Premium.
Gonna move, hit a shot, he scores!
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Now let's get to the CME Group in Chicago. Rick Santelli is there with the Santelli Exchange. Hey, Rick.
Good morning, and thank you. I'd like to welcome my guest this first day of a two-day Fed meeting, Torsten Slok, Deutsche Bank Securities Chief Economist. Torsten, thank you for joining me. Let's get right into it. Let's start out with this morning's data. Productivity third quarter final was 1/10 less negative at -0.2, but it's still the first negative quarter since the end of 2015. Your thoughts?
Yeah, so the thing that's going on in the economy at the moment is that there's downward pressure on business investment. Trade war uncertainty is pushing down capital expenditures, and it's been really declining over the last 12 months. At the same time, hiring has been doing really well, as the employment report showed on Friday. So in that context, we simply have fewer computers, and we have more people. And in that context, it's not a surprise, really, that productivity is beginning to slow down.
Now, you mentioned what's going on with respect to jobs. You also have done research that shows quite clearly that non-residential business spending and fixed investment spending both have peaked right at the time the trade war began, and that's also having a negative impact on jobs. So what went right on this past jobs report?
Yeah, so the somewhat puzzling thing is that employment growth is still so strong. What we've been looking at is slowdown, in particular in business investment. We've seen residential investment do better, so there's been some offsetting effect in overall investment picture. But with that backdrop, you would expect still that if businesses are investing a little bit less, if they're a little bit more cautious, if they're a little bit more worried about the outlook, that also should begin to have some negative consequences for hiring. And we've just not seen that yet. So it's pleasing that the labor market is still doing so well, but it does look like something has to give. We cannot have that CapEx is weak and that the employment report continues to be so strong.
Well, obviously, we see when we get optimistic news on either USMCA or trade with China, both interest rates and stocks move up a bit. But in the final analysis, what you're telling me seems to be that even if we get everything the market wants, central banks around the globe most likely are going to continue to push more liquidity in. Do you agree with that? Do you think it's needed?
I do think central banks need to continue to do something to help the global economic outlook. We still have significant uncertainty, not only about the trade war here and now, but also going into next year. We have also had that uncertainty associated with issues around the election. So we are a bit worried that that uncertainty might still hang over the market. But central banks are essentially trying to counter some of those negative things that are weighing things down. And if you look at the speed with which OECD central banks are cutting rates at the moment, this is happening at the fastest rate since the financial crisis. So there is a significant monetary policy stimulus in the pipeline that should be helping. And to your point, liquidity should also be supporting both markets and the economy. So that's why we do not expect a recession, but we're still watching those downside risks very carefully.
You know, real quickly, Torsten, another thing that you've demonstrated that I wasn't aware of, we are at a record divergence between consumer confidence and corporate confidence. Your final thoughts on why that divergence is occurring? Historically, it always seems to pick the beginning and end of business cycles.
Yeah, this is really noteworthy. I mean, relative to consumers are very optimistic compared to corporate CEO confidence. It's actually at the lowest level in 10 years. And this divergence is really unique. It's very unusual that you see that corporates are very pessimistic and consumers are very optimistic. And you're absolutely right. Looking over the last 40 years, we've seen that when that divergence gets to the point where we are now, that normally means that we are at the end of the cycle. But given some of the CEO confidence is driven by trade war worries, we do believe that as those trade war worries will begin to fade as we go into next year, we should begin to see some convergence again. So we do not believe that this is the end of the cycle, but we're watching very carefully for this divergence and how it plays out over the coming months.
Thank you, Torsten. Thank you for pointing that out to our viewers. David Faber, back to you.
Okay, thank you, Rick Santelli. Now let's send it over to John Fort so we can get a look at what's coming up on Squawk Alley. John.
Hey, David, well, we got two young tech companies, two earnings reports last night. MongoDB is up about 2%. Stitch Fix is up 10%. We've got the CEOs of both coming up on Squawk Alley.
Heading into retirement, you want to...
You love TuneIn for live-breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught, it is in for the right side for the touchdown.
Search NFL today.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
Want TuneIn to remind you when the big NFL game is about to get underway? Be sure notifications are allowed on your phone and search NFL on the TuneIn app. Find the game you want to hear under events and tap Notify Me. We'll let you know exactly when it's time to listen in for kickoff.
Some days life can get in the way of catching up on the news that moves your world. TuneIn is here to help. With live 24/7 coverage from CNN wherever you go on the TuneIn app, you can always find a slice of your schedule, however long, to check in on the biggest stories of the day.
Hell hath no fury. The president's counselor went on a rampage on a taped phone call with Washington Examiner reporter.
Search CNN on TuneIn to get the live news when it matters most.
Far wing elevates, triple bucket.
The war of the crown. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut
it. The sideline, the man bleeds for three.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now, hear it live on TuneIn.
Pump fake in the lane, turnaround jumper from 8 feet is good on the
Search
right block.
NBA today to start listening.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Welcome back to Squawk on the Street. I'm Dominic Chu. Markets have been moving between gains and losses on that incrementally positive development on the U.S.-China trade front that's helping to provide some positivity, leading to outperformance, as you can see here, in economically sensitive sectors like tech, consumer discretionary, and industrials. Now, energy is an upside standout, helped along by higher oil prices on some of that trade optimism. Among the leaders today so far in that sector, you've got Devon Energy, also Apache, Valero, and Baker Hughes as well. Keep an eye on those energy names. Now, David, I will send it back downtown to you folks at the New York Stock Exchange.
Okay, thank you, Dom. $1 million watch is going up for sale tonight right here in New York. Our Robert Frank has more on how we might see the most expensive watch ever sold at auction. Robert. Good morning, David. Jack Nicklaus's gold Rolex will hit the auction block tonight at a sale held by Phillips in association with Box and Russo. Now, watch experts say it could surpass the $17.8 million that Paul Newman's Rolex fetched in 2017. That became the most expensive watch ever sold at auction. Now, Nicklaus's watch is considered one of the holy grails of sports watches. It was the only watch he wore for more than 50 years, and it was on his wrist for 12 of his 18 major championship presentations.
Play golf with the watch on, but it came on as soon as I came off the golf course. My watch and wallet came back onto me. So every time I'm with a trophy, every time I travel, I've got a picture with me with the watch. And it was part of me.
Now, all the proceeds for the sale of that watch will go to his charity, the Nicholas Children's Healthcare Foundation. Now, the collectible and secondhand watch market is expected to top $16 billion this year as the auction houses and online marketplaces attract a new breed of younger collectors. Also selling tonight, Carl, you'll like this one, Marlon Brando's stainless steel Rolex GMT, which he wore in Apocalypse Now. Now, Brando etched his name on the back. It is being sold by his daughter, Petra. The proceeds for Brando's watch also going to charity. Bidding there starts in the six figures, and you can bid on all of these today online, guys.
Anybody want to go halvesies?
Robert, what do people do with these watches? Do they put them in a case somewhere and show them off, or do they actually put them on their wrist? It's a mix. Sometimes you'll see a museum pick one of these things up. You could get a lot of the sort of Hollywood memorabilia types coming in for Brando. Maybe, you could picture something like Augusta maybe buying Jack's watch. So it's a mix, but the Newman watch went to a private collector. So a lot of these wind up with private collectors, although clearly probably not worn on their wrist.
That's gorgeous, Robert. Very nice. Robert Frank.
Thank you, guys.
When we come back this morning, we'll get an exclusive with the CEO Stitch Fix on the stock popping on earnings. Dow's up 7. Squawk Alley starts in 3.5 minutes.
Real-time.
Be better informed, be better prepared. The Better Network is on TuneIn. This is Brent Musburger. Search BETR and start hanging out with me and my guys in the desert weekday afternoons. The Better Network is now on TuneIn.
Cutting for the net, scores! On the goal line, Marchand scores!
Hockey fans, the 2019-20 NHL season is here.
And tucks it home!
And with this team, it's really fun to be a part of a team like that.
And you can hear the action live on TuneIn Premium. From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow and TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Far wing, elevates, triple bucket.
The roar of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut it.
The sideline, the man bleeds for 3.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now, Hear it live on TuneIn.
Fake in the lane, turnaround jumper from 8 feet is good on the right.
Search NBA Today to start listening.
Hey, NFL fan, can't watch the game? Can't be there? We got you covered. With TuneIn Premium, you can listen to every NFL game live as it's happening.
LaShawn McCoy has an opening on the right side, punches into the end zone for the touchdown.
Or catch it later on demand.
Offset backs behind Mahomes. The give is to Williams. Starts right, cuts it back to the left, and blows into the end zone for the touchdown.
You call the plays. Follow the NFL anytime, anywhere, all season long with TuneIn Premium. Upgrade today.
Good morning. It is 8 a.m. at Apple's headquarters in Cupertino, California. It's 11 a.m. on Wall Street, and Squawk Alley is live. Welcome to Squawk Alley. I'm Carl Quintanilla with Morgan Brennan, John Ford at Post 9 of the New York Stock Exchange. Start with Apple this morning. Shares are trading higher today, adding to this year's monster rally. Apple's up about 70% for 2019. It makes it the best performing stock in the Dow. Trailing Apple, a distant second, is Microsoft, up about 50% for the year. Joining us to talk more about those names, Ted Smith, Union Square Advisors co-founder and president, and Kevin Delaney, Quartz co-founder. Guys, good to see you both.
Thanks for having me.
Kramer likes to say Apple is the key to the market. Do you agree?
I do.
What about it is so important right now?
I think it's the breadth of the technologies that they deliver to both consumers and enterprises over time. And the fact that in this latest consumer cycle where they're coming out with Apple Pay, the Apple Card, all the partnerships that they've got going these days, in addition to the core products, they're just so dominant on so many fronts.
Getting investors familiar with those new fronts has been a bit of a challenge this year, but feels like we're getting there, wouldn't you say?
I think so. You know, the thing that we've been talking about is this slowing of their iPhone sales, and the Apple story, the dominant Apple story of the last decade is actually coming. That chapter is over, and so they've got to transition people to things like subscription services. Obviously, streaming is one of the big wars. Payment, they're doing more retail things now. So with the Apple credit card. So I think that's as the new chapter opens, we're seeing more and more stuff like that.
We can talk about Apple as a company specifically and the shift that's happening there, but whether it's Apple, Microsoft, which Carl just mentioned, the fact that year to date, it's information tech stocks and communication services stocks that are the best performing sectors in the S&P. Would we be having this conversation to this extent if interest rates weren't so low?
No, I think those interest rates absolutely contribute to that. The incredibly low cost of debt that all of these companies can take advantage of, and the companies in their ecosystems as well. So that's certainly been part of the fuel, but I also think it's just the fact that these companies have really built out tremendous ecosystems and tremendous technologies that enterprises and consumers, those two names, Apple and Microsoft, both enterprises and consumers want their tech.
Speaking of all of this, the company is making two announcements on its Apple Card today. Josh Lipton has that for us. Josh?
Carl, that's right. This morning, two pieces of news regarding the Apple Card. First, starting today, people who have the Apple Card can buy an iPhone and pay for it over 24 months with zero interest. Remember, that's a new program that Tim Cook first announced on the company's earnings call back in October.
One of the things we're doing is trying to make it simpler and simpler for people to get on these sort of monthly financing kind of things. That's a part of what we announced with the Apple Card earlier in the call, and so we're cognizant that there are lots of users out there that want a sort of a recurring payment like that.
The question for investors is this new monthly installment program help encourage more iPhone upgrades in the quarters ahead, and if so, by how much? Now, in addition, Apple also announced a new holiday promotion. So Apple Card customers can get 6% cash back on purchases of Apple products from now until December 31st, including new products like the iPhone 11, AirPods Pro, and Watch Series 5. Normally, remember, Apple Card customers get 3% cash back on Apple purchases. That could certainly help drive adoption of that new Apple Card in the critical holiday shopping season. If customers walk into a store and are looking to buy new hardware, then signing up for that card could make that much more sense. Apple Card officially launched in August along with partner Goldman Sachs. Guys, back to you.
Ted, this is
a services triple play attempt by Apple. I mean, you come in, you're maybe looking at an iPhone, and they say, hey, you can get it. If you get an Apple card, you can go ahead and get that and pay by the month, no interest. Oh, and then, by the way, 6% cash back. If you want to pay for all of it up front, you get that discount. Oh, and then, by the way, you get Apple TV Plus with that free for a year if you get the phone now. I mean, it's a really interesting move by Apple to put all of these things together in one season.
Absolutely. And Kevin talked a little bit about the notion that we're transitioning from an iPhone-dominated Apple to an iPhone, or an Apple with iPhones, iPads, obviously Macs, but all these additional services. They're trying to rope everybody in as early as they can on those services and get that recurring payment going. I actually think one of the things that's going to offset the down cycle of the iPhone is exactly this sort of approach to being able to pay for the iPhone over time, because it's gotten so expensive. It's a pretty expensive piece of equipment, but if you can pay for it over 24 months, it doesn't look quite so bad.
Yeah, Kevin, to that point, how meaningful is this not only for the Apple Card itself, but also for generating more sales of the hardware?
I think, Apple's behaving more and more like a normal retailer. You're seeing discounts, you're seeing bundling, you're seeing subscriptions, you're seeing all of these things. And I think, to Ted's point, it's a sign that we are in this new chapter, and they want to be more aggressive about it. I don't see a meaningful spurring of iPhone sales from this sort of promotion. I think at best it's going to give them a little momentum with adoption of the card and maybe with some of these services. But
I maybe disagree a little bit, because it's just removing that extra bit of friction. Before, it's like, I don't need another credit card. But now, if I'm in there buying a phone, God forbid if I'm buying two, I'm thinking, am I stupid not doing this? 6% off if I'm spending $1,000 plus. Maybe I ought to do this. Oh, and by the way, those AirPods I was thinking about, maybe I ought to throw those in. So incrementally, especially in a season like this,
it's to your point about how traditional retailers have, right? You go into Macy's, you get the Macy's card, you're 10% off right there, right?
Yeah, and Apple doesn't exist in a vacuum, actually. So if you're an Amazon Prime subscriber, or if you have a credit card and you're an Amazon Prime subscriber, this month on any purchases you make, you don't get just 1%, but you get 2% off of those purchases. So I'm in the Apple store, I have my Amazon Prime Visa out, I'm getting 2% off do I want another credit card? And so I think it's worth weighing, the Apple experience doesn't exist in isolation of every other aggressive retail tactic that we're all bombarded with.
All right, I want to shift gears for a moment because we got some news. Boeing announcing its orders for November. Phil LeBeau has the numbers for us. Hey, Phil.
Morgan, relatively good news for Boeing after several months of showing no growth when it comes to commercial airplane orders. Boeing booking a net gain of 11 commercial airplane orders last month. Now, you might be saying, well, 11, that's terrible. Well, that is some improvement compared to what we've seen in recent months. In terms of the 737 MAX, for the first time since January, 2 firm orders for a total of 30 737 MAXs. These came at the Dubai Air Show. Year to date, though, Boeing's commercial airplane orders, negative 84. That's right, they're down 84 for the year in terms of commercial airplane orders. In terms of deliveries, Boeing is currently on pace for its fewest number of deliveries since 2008, currently at 345. They'll probably book another 20 to 25 in December, so they're going to be around 370. By the way, guys, it is expected that Airbus will deliver about 800 commercial airplanes this year. Guys, back to you.
On a week where we're going to get some more testimony in Congress regarding Boeing.
Yeah.
Phil, thanks. Turn to Netflix this morning. Shares are down as Needham goes to a sell. Analyst Laura Martin says the streaming service she thinks could lose as many as 4 million U.S. subs next year, and she's out again saying they need to have a ad-supported, lower-priced tier to compete with the rival services that are much cheaper. Is she right?
I think she is. I think the real question in the face of so many new streaming services and existing players as well, but obviously the most obvious ones would be Apple and Disney, right? How many of these services will an individual consumer likely sign up for? And if the difference in price is so significant, which it is today, it's $5+, in some cases even more than that, it's putting Netflix in a really difficult position to be able to go forward.
Do we not believe people like Netflix because there are no ads to begin with?
I think that's a factor, but I think to Ted's point, the bet is that Reed Hastings has said very explicitly that he views Disney streaming service as their most serious competitor. They're watching very closely, and their bet is that people will have multiple streaming services, that you'll pay for more than one a month, and that if that's the case, then Netflix is going to be part of that bucket. I think the future of Netflix And I think Reed Hastings would acknowledge that hinges on that thesis.
Yeah, Ted, the other piece of this report that got my attention, I'll just note, I think Laura Martin's going to be on Closing Bell later today as well to break the details down. But the other piece of this report is that she said that U.S. subs are about 3 times more profitable than offshore subs. The case being that as Netflix does continue to expand and that international is such a big part of that moving forward, that even so, even if you're not bleeding subs and it ends up being one of those platforms that U.S. consumers hang on to, the numbers are still going to be kind of tough to reconcile.
The cost of acquiring those customers is significantly higher, hence the profitability of those subs is lower. I read Laura's report. I'm sure she'll do a great job when she comes on. But the most interesting thing to me about that, the subtext of that, was the fact acquire a Netflix subscriber who goes away from the service to come back on also skyrockets the overall cost and really reduces profitability. So if you're trying to reacquire U.S. subs or get those international subs, in both cases, much lower profit margins.
I don't like how the case for Netflix has changed so much. I think a couple years ago, there was this argument that, hey, they've got all this data, and so they understand what needs to be made and who to show it to, and they're going to be better at that than everybody else. The conversation has shifted, especially with Disney coming out. Disney didn't need data. They know you love Star Wars, you love Marvel, you love princesses, something for every age, right? And now the argument around Netflix is more around scale, and they're all over the world. Like, Disney can't get all over the world? I don't know. So, yeah, I think a lot of people are going to have multiple services, but everybody's not going to. Not all the time. Everybody doesn't have cable, and I think it does raise additional questions about what's going to happen.
Well, I think you're totally right about this, how the story has shifted from Netflix algorithmically being able to create programming and then deliver you these shows that you might not have imagined yourself watching. And the story has actually shifted to the quality of the programming. So the way that Netflix defends the higher price is that they're putting that money into programming. They believe if you pay $16 a month, you should pay $16 a month instead of $5 a month, because they're going to put that extra $11 into programming. And so the story on Netflix now is, or across all the streaming services, has become price and quality of the programming, which, as you point out, is a shift from what people were saying about Netflix.
The number of titles they're going to publish relative to, say, HBO Max, right, is still a multiple. Who knows what that is, right?
Yeah.
I mean, they're definitely more going buckshot than laser. Wouldn't you argue?
Yeah, no, they're definitely going more buckshot. But what they're saying is that they need the money. They're not going to cut their price because they need that money for the volume and quality of the programming that they're pursuing. And that ultimately, their argument is that people spend more time with Netflix if the programming is good. And it doesn't matter if you get a free Apple TV subscription. At the end of the day, if you're watching Netflix, you'll pay for it.
Ted, I wonder, and I say this because we've had a few people on our air in recent weeks, including a couple content creators themselves, who've come on and said they see this as the evolution of streaming as almost cable 2.0. At some point, it's going to all be bundled together, and there's basically going to be some sort of consumer access to everything one way or the other.
I think we could see some of these sort of super streaming services bundle those together and consumers get a better deal for that. But at the end of the day, and it's been said on this program many times, content is still king. So there's a certain irony around the fact that on the day that the Needham report comes out and we see have this conversation, it's also the day the Golden Globe nominations were announced and Netflix absolutely swept everybody.
Yeah.
So with
on
things like
films and television.
Absolutely. So the content is there. The question still remains, will people pay a premium for that content?
Yeah, and I think Disney is actually making the bet that you're pointing at, Morgan, because you can actually get a higher price bundle, which also includes ESPN Plus and Hulu. And so there's a lower priced core offering, but they're playing both strategies, and it'll be interesting to see as they start talking about what people are signing up for, if they're getting any traction for that more bundled offering.
Yeah, numbers we hope to get in the months ahead. Yeah. Kevin, Ted, thanks, guys. Good stuff.
Thanks, Carl.
Thank you.
Morgan. John?
Well, when we come back, shares of Stitch Fix and MongoDB both getting a boost from better than expected quarterly results. We're going to speak exclusively with both of those CEOs of those companies. Squawk Alley is back after a quick break.
This piece is talking to me.
Yeah? So what do you see?
Owning your own business doesn't automatically make you an accounting expert. So it's good to know that when you choose to manage your money with Sage, you don't just get great business management at your fingertips, you get great local support too. Anytime, anywhere. Simple solutions from Sage. Trusted by over 1 million British businesses to manage finances, operations, and people. Find out more at sage.com/automate.
Pascal gobbles up the rebound and slams it down.
Get your favorite NBA team right here on TuneIn.
A step back, deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
Whether you call yourself a Democrat, Republican, Independent, or something else, the road to 2020 is on TuneIn.
What a night! And a complete earthquake. This was
Follow every step of the Democratic primaries while hearing the latest headlines from the White House with live 24-hour news from CNN, MSNBC, Fox News Talk, and more.
We're closing in on the first results in the battle for the White House.
Experience the election through the sources you trust with the nonstop news channels on TuneIn.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Introducing a new podcast, ESPN Daily. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. ESPN Daily, hosted by me, Mina Kimes. Listen now to ESPN Daily on TuneIn.
Hey, NFL fan, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can listen to every NFL game live as it's happening.
To LaShawn McCoy, has an opening on the right side, punches into the end zone for the touchdown.
Or catch it later on demand.
Offset backs behind Mahomes. The give is to Williams. Starts right, cuts it back to the left, and blows into the end zone for the touchdown.
You call the plays. Follow the NFL anytime, anywhere, all season long with TuneIn Premium. Upgrade today.
Welcome back to Squawk Alley. Shares of Stitch Fix surging up better than 9% this morning after better than expected quarterly results. And joining us now exclusively is Stitch Fix founder and CEO Katrina Lake with us on set. Great to have you.
Thanks for having me. It's fun to be here.
Some people, I guess, weren't expecting these results, but let me break it down. You got 3.4 million active clients. You're approaching a rate, I believe, about $2 billion in annual revenue, growing 22% year over year. What's working when it comes to getting new customers into the platform? I remember you were experimenting with some marketing things a few quarters ago, had some hiccups. Don't see any hiccups this quarter.
Yeah, no, it was a great quarter. Really proud of it. And the 21% year-over-year growth that we showed this quarter, some of that, to get to your question about what's working, is we had 10% year-over-year growth in revenue per client. And so that means that clients who are coming into Stitch Fix are buying more things, staying longer, having more successful experiences, and that's all great. But we're also seeing a lot of great client growth. And so we saw 17% year-over-year growth on the client side. We see a lot of the marketing diversification efforts that we're working. We've done a lot more in terms of integrated marketing, of really having brand and kind of performance and digital marketing working better together. And so yeah, we're proud of the results this quarter.
You talked more about Shop Your Looks, which is what a lot of people might think is breaking the model, right? Not shipping 5 things that people have never seen before, but if you go onto the app, you can see, things that go together and buy them individually. What is Stitch Fix in a world where you can shop your look? Is your argument, we make the shopping experience more efficient through software, so we don't have to carry as much inventory, we can get you what you want with less hassle? Is that what this becomes about?
Absolutely. I mean, I think the market opportunity for a more personalized apparel buying experience is enormous. And the 5-item fixes that we've historically built most of our business on are a great way to buy things like jeans and blazers and workwear. But there are some categories where people want more choice and people like more of that instant gratification. And so Shop Your Looks, yes, there's a little element of it that looks like e-commerce. You can click on something and buy it. But what's really radical about Shop Your Looks is that for any person, we are not showing you tens of thousands of items. You are not searching and culling and filtering. We're showing you like 30 or 40 things, and you are converting off of that. And so it's a very radically different e-commerce experience.
Does this let you become more of a gifting platform next holiday season? Because if you know what my wife has got from Stitch Fix, and what goes with it and what her size is, doesn't it make it easier for me to just log on and buy her something that goes with what she's already got? Because in the past, you haven't really participated in the season in the way that most retailers do.
We haven't. I love the product idea. Right now, honestly, we're very early in this this set of innovations. Even Shop Your Looks is only rolled out currently to 30% of our women's clients, and so we have a lot of work to do to really optimize the feature and to roll it out to our whole client base. But yeah, I mean, it definitely opens the door to all kinds of other ways to think about our business model, including things like gifting.
The exclusive brands, which are the private label products for the company, how profitable are those versus selling other labels and other brands' products, and how much of the breakdown are they in terms of what customers are buying?
Yeah, so we've shared in the past that that exclusive brands represents more than 20% in our women's offering, and it's actually more than that in our men's offering, and it's important in kids as well. On a gross margin basis, our exclusive brands do tend to have higher gross margins than our market branded products, but it's not necessarily for the reason that you would expect. It is partly because of kind of the ability to have a markup and to not and to have a little bit of a higher margin in the initial part, but the bigger reason is actually selling through the product. And so when we are buying product for our exclusive brands, we are often buying things that we have high confidence are going to work. They're products that are going to sell through. They're going to sell through quickly, and so that's really what drives a lot of that margin favorability. But because our model is a full price model, because we are using data to buy the product, the distinction, the difference between kind of branded product and not branded product is not as great as you might see in a department store model, as an example.
How are you walking investors through? You said we have a lot of work to do on Shop Your Looks. I mean, when people ask about whether 2020 is an investment year, quote unquote, versus reassuring them on margins, what is that? What cycle are we in regarding investment?
Yeah, it's a great question. We are doing a lot of big investing. I mean, we opened up the UK and kids last year. We're annualizing that investment. Those are still investment markets for us, and so we have that. And we're investing a lot in technology and data science, and so we have a lot of stock-based compensation. That is how you can see the investment that we're making in the team, and that's really against the product, against how do we take Shop Your Looks and make that fully integrated into our experience, roll it out to everybody. And so there's a lot of investments we're making, but at the same time, we are showing leverage. We're showing great gross margin leverage. We're showing leverage in our core business, and so our business has always been one of profitable growth. We generated $20 million of free cash flow. We've been profitable for a long time, since 2014, and we've been really proud that we've been able to use that profitability to fuel our growth.
A couple of major leadership changes you announced. Your CFO is leaving. You're looking for a new one. Also, a new president coming in from Bain. And I believe you said that she's going to focus on some of these newer initiatives, including Shop Your Look. What does that signal about how big you expect the non-fix segment of the business to be in 3 to 5 years? I mean, would it be outside of your expectations if most of the business is not 5 items in a box and it's people shopping individually?
Yeah, I mean, we're thrilled to have Elizabeth join. I think Elizabeth is going to be the type of leadership that is going to be great for our future, that's going to set us up for the future, and to really answer questions like this. And so what we've seen with Shop Your Looks is that it's super exciting. People love it. It's a great feature. It's additive to the business. And the realization about our business is when we're thinking about helping people to buy apparel in a more personalized way to help them find things that are the best for them, that there's actually a variety of different ways that we can help people to do that while leveraging our skill set and our toolkit. And so really the charter is, how do we figure out how all these things engage? Fixes are going to be a great core part of our business, but there's also going to be other ways that people can benefit from personalization in the way that they buy. And so we're really thrilled to be able to have her leadership joining the team, and really excited to share more around this strategy as we develop it.
Are you going to need either physical retail or people in physical locations, maybe in major cities at some point, to maybe increase the onboarding of people onto the platform? I can imagine, that there are people who don't exactly know their size, and that might be a place where they abandon. Is that something that you rule out because of your model, or something that's possible?
It's not ruled out, but we don't have any plans in the near future to do that now.
Have you been impressed by any legacy retailer? This past quarter, we've been talking about how some have managed to unlock e-commerce, figure out a way to avoid being Amazoned. Are there some whom you've been struck by?
I mean, overall, I have a lot of respect for what legacy retail is trying to do. Like, it is not an easy job to be trying to push and innovate, and also to be trying to consolidate your store footprint and dealing with that side of the house. And so I honestly, I think there's a lot of people that I've been impressed with in navigating through that change. On the apparel side, like Target has done such a great job with apparel. And so, that's been a source of kind of excitement and inspiration. And it's cool to see that they've been able to use that to drive traffic. But I think it's a time of great transformation in retail right now, and we're really excited with the positioning that we have, and feel like we're really lucky that our path is differentiated and clear.
So what are they fundamentally getting wrong then? You hired a couple people from Old Navy and Gap, I believe, in the merchandising area. Yeah. So I mean, they must not be getting that wrong if you're hiring folks from them. So what is the problem? I mean, Gap's not growing. L Brand's not growing. Macy's isn't growing. Nordstrom, on the top line isn't growing. Why do you think that is?
I mean, it's really about just reacting to the consumer, how he and she wants to shop today, and where he and she wants to shop. And so, for us, we're flexible, where we can be. You can shop with us online. You can shop with us in the app. You can shop with us now in a variety of ways, of fixes and in a more personalized shop your looks kind of way. And I think the world wants a more personalized offering. I think the days of retail saying like this is the it thing and everybody should go buy it, those days are gone. And today people want to be treated like unique individuals, and they want to be respected for their preferences. And I think our model is really well suited to deliver against that.
All right, Katrina Lake, CEO and founder of Stitch Fix, stock up big after earnings. Thanks for sitting down with us.
Thanks for having me.
When we come back, under investigation, the government's going after Google. We're going to tell you why. We're going to check on the major averages here. Session high, up 39. Session low, down 105. We're somewhere in the middle. Don't go anywhere.
Pascal gobbles up the rebound and slams it down.
Catch your favorite NBA team right here on TuneIn.
A step back, deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
Hey, NFL fan, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can listen to every NFL game live as it's happening.
LaShawn McCoy has an opening on the right side, punches into the end zone for the touchdown.
Or catch it later on demand.
Offset backs behind Mahomes. The give is to Williams. Starts right, cuts it back to the left, and blows into the end zone for the touchdown.
You call the plays. Follow the NFL anytime, anywhere, all season long with TuneIn Premium. Upgrade today.
We can't make traffic move faster during rush hour. But we can help you catch up on the news with TuneIn. With live around-the-clock news from MSNBC.
In the UK, they're significantly worse. When the president gets up to the podium...
CNBC and Fox News Talk.
The Fox News poll sizing up the race for 2020 found that each of the 5 top Democrats...
You can use your stop and go for good by staying in touch with the world. Search news to hear what's happening now.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Upgrade to TuneIn Premium and get over 45 commercial-free music stations. You'll also get live commercial-free news, plus live play-by-play games from NFL, MLB, NBA, and NHL. Visit TuneIn.com/premium to upgrade.
On the goal line, scores! It takes it home!
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
Hear the action live on TuneIn Premium.
And a shot.
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today. Don't want to miss a second of your NFL team's next matchup? Let TuneIn remind you. Just make sure notifications are enabled on your phone and search for your team profile on the TuneIn app. Then, find the game you want under events and tap Notify Me. We'll send you an alert as soon as live coverage begins.
Welcome back to Squawk Alley. European markets getting ready to close. Seema Modi joins us now with a look at today's action overseas. Seema.
And Morgan, we've seen some key management shakeups here in the U.S. Well, it's starting to happen in Europe as well. First at Tullow Oil. This is a major UK oil and exploration company ousting its chief executive and head of exploration yesterday and announcing it's scrapping its dividend as more production cuts are expected. Shares are higher today following a whopping 70% decline in the stock yesterday. In retail, Ted Baker's chief executive resigning this morning after less than a year on the job. The vice chairman has decided to leave as well, and it comes after the UK fashion label has really struggled to stay competitive amid a rise in fast fashion, resulting in a decline in profitability. Shares are under pressure, as you can see, down 13%. Back to broader markets. 2 days to go till the ECB policy decision, and European markets are on track for back-to-back declines, although France and Italy are higher on the day. One piece of soft data, German sentiment improving from a month ago. That is encouraging. Lastly, guys, food delivery company Just Eat in focus. It rejected a takeover bid from South Africa's Naspers as it tries to move forward with its tie-up with Takeaway.com. Unlike here in the U.S., there is relatively limited food delivery competition in Europe, which has really put the spotlight on Just Eat shares. Guys, I'll send it back to you.
Seema, thanks very much.
Yeah.
Let's head over to Sue Herrera, get a news update this morning. Hi, Sue.
Hello, Carl. Hello, everyone. Here's what's happening at this hour. House Democrats announcing 2 articles of impeachment against President Trump, abuse of power and obstruction of Congress. Voting is expected in a matter of days in the Judiciary Committee and by Christmas in the full House.
Since misconduct goes to the heart of whether we can conduct a free and fair election in 2020. It is bad enough for a candidate to invite foreign interference in our political process, but it is far more corrosive for a president to do so and to abuse his power to make it so.
A Pennsylvania appeals court rejecting Bill Cosby's bid to overturn his sexual assault conviction. This over the trial judge's decision to let 5 other accusers testify. The ruling was being closely watched because Cosby was the first celebrity tried and convicted in the Me Too era. Ethiopia's prime minister has received the Nobel Peace Prize at a ceremony in Oslo. Abiy Ahmed said that his horrifying experiences as a young Ethiopian soldier made him determined to seek the end of a long conflict with neighboring Eritrea. You are up to date. That's the news update this hour. I will send it back downtown to you. Morgan?
Sue Herrera, thank you. When we come back, Google under investigation over 4 firings at the company. Roger McNamee weighs in next. Don't go anywhere. Dow's up 7.
On 3, our unlimited data is actually unlimited. Like for reals. None of this, we're so unlimited. But nuh-uh, you can't watch your fave Christmas film endlessly. Or dead scroll inspo for tree decorations until 4 in the morning. We wouldn't do that to you.
We have no speed limits, no data caps, and you'll be 5G ready at no extra cost.
Ho, ho, ho.
Switch to 3, in-store or online. See 3.co.uk/unlimited-data.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Cutting for the net, scores! On the goal line, Marchand scores!
Hockey fans, the 2019-20 NHL season is here.
And tucks it home!
And with this team, it's really fun to be a part of a team like that.
You can hear the action live on TuneIn Premium. From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown to Keenan.
Search NFL today.
Are
you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
Welcome back. Facebook pushing back on the demands of U.S. Attorney General Bill Barr for it to delay the rollout of end-to-end encryption across its messaging platforms. Julia Borson is in Los Angeles to break that down for us. Julia.
Morgan, that's right. Facebook saying it will not open its encrypted messaging to law enforcement. Facebook's heads of Messenger and WhatsApp writing to Attorney General Barr, the Secretary for Homeland Security, Chad Wolf, and his counterparts in the UK and Australia, saying, quote, the backdoor access you are demanding for law enforcement would be a gift to criminals, hackers, and repressive regimes, creating a way for them to enter our system. Now, Attorney General Barr raised concerns back in October that Facebook's push to do end-to-end encryption across all of its messaging apps would make it harder for law enforcement to track down terrorists and child predators. Facebook saying it will help law enforcement, quote, as long as it is consistent with the law and does not undermine the safety of our users. Facebook also explaining why it is committed to encryption in its testimony by its director for privacy and integrity to the Senate Judiciary Committee, noting that encryption is already used around the world, including in the more than 200 million iPhones sold last year and in a range of international messaging services as well. Morgan, back over to you.
Julia, thank you. Joining us now for more is Elevation Partners co-founder and early Facebook investor, Roger McNamee, who's here at Post 9 on set with us. Welcome.
Good to be here.
I want to get your reaction to this news. On the one hand, I get the point Facebook is making that this is a gift to criminals, hackers, and repressive regimes. The flip side of that, though, when you look at why the FBI has been pushing for this, is you can make the argument it's been a gift for child predators and terrorists and other nefarious players as well. So who's right?
So on this issue, Facebook's definitely right. The problem with the Justice Department case is that an awful lot of the hacks and cyber problems we've had over the last 5 years have been the result of exploits found and created by our security services that were then stolen in other hacks. And so when you create backdoors, the vulnerabilities are much more dangerous than if things are closed off. So I think Facebook's case is right. The challenge for Facebook is that the end-to-end encryption strategy, from their perspective, is designed to protect them for responsibility for hate speech and all of these other things. And in my mind, there are better ways to solve that problem than creating backdoors and end-to-end encryption. I want to get rid of algorithmic amplification. I want to get rid of micro-targeting. I want to make it a lot harder to spread the hate, and I want to make it a lot harder to spread disinformation and conspiracy theories. So there is a path through all of this, and this conversation, the one that they're having between Facebook and the Justice Department, is talking about only one piece of it.
Okay, so that begs the question then, and I know you just touched on what you think the other path is, but if Facebook does continue with encryption and doesn't take the other path that you've just laid out, is it all or nothing, or is there another solution to be had there too?
Well, it's a really great question, because politically speaking, our systems are not working very well on the regulatory front. And so we have this challenge that internet platforms are pretty much doing what they want. And that's causing massive problems for elections. It's causing problems in public health. It's causing problems in privacy and competition. And at the congressional level, we're having fights over things that historically people have always agreed on, such as voting rights and things like that. And so I'm very troubled by how we make the regulation work here. I'm hoping that the states' attorneys general are going to be the ones who bring the hammer down on internet platforms for things like hate speech, disinformation, and conspiracy theories. But at the end of the day, I believe Facebook is absolutely correct to resist this. I do not think we want to be creating vulnerabilities, because they're going to get exploited. And if you think about it, the damage from hacks is always going to be greater afterwards than it is before, just because you're just inviting all sorts of new people to break in.
All right. So whether it's state AGs or DOJ or whatnot, is there an internal backlash within tech to Facebook from Benioff, Dorsey, yourself, and is that growing?
Yes, but very slowly. We have an election coming in 11 months, and it doesn't feel like it's moving rapidly enough to protect the integrity of the vote, with one possible exception, which is the thing going on at Google right now. And, you know, the employees are the key to everything if we want to move quickly. Because the employees of the tech companies have trusted, with good reason, they've trusted the executives running their companies for a long time. And right now, Google in particular, but Facebook also, and Amazon, are creating reasons for employees to distrust them. And from that, I think we have an opportunity to create the kind of pushback that would move things very quickly. You remember what happened with Uber when Susan Fowler wrote that extraordinary post about sexual harassment? What? Within 6 months, the entire management team had been changed out. And I think a Susan Fowler moment is possible at Google. I think it's possible at Facebook. And that's what, you know, what I would hope for.
All right, so you just mentioned Google. We're going to dig into that a little bit more, too, just get our viewers up to speed on this. The news that is regarding Google right now. The U.S. National Labor Relations Board launching an official investigation into its recent firing of 4 employees last month, looking at whether Google discouraged employees from engaging in union activity. This comes just months after the tech giant reached a settlement with the same federal agency over a similar investigation. Sounds like you're on the side of the employees with this one.
Oh, definitely. And I think the National Labor Relations Board is going to come down on the side of the employees, too, assuming they adjudicate this the way they have anything historically. I mean, Google historically had the most fantastic employee relations. I mean, if you think about, well, no.
But is it really just historically, Roger? I mean, I understand that there are some employees who want to unionize, who want to walk out, who've been very outspoken, but I'm not sure we're framing it quite the right way. Their ratings on platforms like Glassdoor for Sundar Pichai, for the company overall, still very high. I see plenty of pushback in social media on the desire to unionize longtime employees, higher paid, but a lot happier. I mean, is this a sub-segment we're talking about?
So, John, we're actually saying slightly different things. I'm talking about trust rather than unionization. I think unionization is one vector that some small percentage of the employees are focused on. I think what employees are focused on is having a voice relative to military contracts, relative to going into China, relative to, if you think about that Ascension Health thing we talked about last time I was on, where Google went in and took data that was supposed to be kept in the cloud and ingested it into their AI. I think employees are legitimately concerned about some of the business practices in ways they weren't historically. Some of them want to unionize as a way to gain power to deal with that, and quite clearly that's what the NLRB is going to be focused on. But I think at the same time, this issue, if you lose trust of your employees when employees are the principal asset of your business, that is a terrible thing for management to do.
Bezos doesn't seem too worried about telling employees we need to work with the government. So stay quiet.
Neither does Microsoft.
I'm not arguing with you. And I think that we're going to see whether this is a different generation than the ones in the past. Whether, you know, John makes a really powerful point, which is they may be able to buy off everybody that matters and keep everybody happy and prevent any kind of action. And historically, that's what companies have done when they've had labor unrest, right? They've tried to make tactical moves that take away the energy from organization activities. I just think from Google's point of view, their tactics are so overtly hostile to the employees who are affected that that's a radical change in their behavior. And I worry, if I were a shareholder, I would be super worried about the fact that this could spiral out of control. And in a company where there are other places to work, you might lose some really key employees over issues of trust.
Yeah, I have a feeling we're not done talking about this conversation,
Morgan,
especially where Google in particular is concerned. That said, we appreciate your insights on it. Of course, we got to mention, I think part of the reason you're in New York City, you're doing a gig, doing a concert here with somebody that we know as well from the CNBC universe.
So my band Doobie Decibel System has got a 9-show East Coast tour going on right now. We're playing tonight in Portchester, New York at the Cap, but we're playing Saturday night in Washington, D.C. with Steve Leisman's band, and that'll be at Gypsy Sally's, and Friday night we're in Manhattan at Hill Country Barbecue Market, and we'll be in tomorrow night in Asbury Park at the Wonder Bar. You know, this is today is Dewey Decimal System Day, and the Doobie Decibel System is going to be celebrating that tonight up in Portchester. And I'd invite everybody to come out and see the show. DDSband.com for the tour.
Good play on words. That's good.
All right, Roger, thank you.
My pleasure.
When we come back, the CEO of MongoDB on the heels of its results. Don't go away.
Christmas, a time for celebrating, unwrapping and unwinding. Capture every moment with an epic iPhone 6S with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
Rainy, 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 rainy.
Sergey, why are you in such good mood?
It's raining.
And?
Rain means we take meal pups to cinema. And cinema means they'll be entertained.
Ah, and entertained means they're also quiet for a couple of hours. Oh, let's go. Enjoy 2-for-1 cinema tickets from Meerkat Movies when you buy through Compare the Market.
Qualifying purchases, Tuesdays or Wednesdays, participating cinemas, 2 standard tickets only, cheapest ticket free, T's and C's apply.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you. In the stock market and in life, everything can change from one minute to the next. Be the first to hear the latest money news and market trends with CNBC on TuneIn. Wherever your day takes you, listen to CNBC's full slate of programming, including shows like Fast Money, Squawk Box, and Mad Money with Jim Cramer. And when the next big business story breaks, CNBC lets you know with live updates and commentary. At the office, at home, or on the go. Search CNBC on TuneIn to listen.
Hey, NFL fan, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can listen to every NFL game live as it's happening.
LaShawn McCoy has an opening on the right side, plunges into the end zone for the touchdown.
Or catch it later on demand.
Offset backs behind Mahomes. The give is to Williams. Starts right, cuts it back to the left, and blows into the end zone for the touchdown.
You call the plays. Follow the NFL anytime, anywhere, all season long with TuneIn Premium. Upgrade today.
Cutting for the net, scores! On the goal line, Marshawn scores!
Hockey fans, the 2019-20 NHL season is here.
And tucks it home!
And with this team, it's really fun to be a part of a team like that.
And you can hear the action live on TuneIn Premium. From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today. I'm Scott Wapner. The halftime report is coming up at the top of the hour from here at One Market in San Francisco again. Former Twitter executives Dick Costolo, Adam Bain are with us today. We'll find out where they think the money is going to be made out here in 2020. We'll also ask them about their former company and CEO Jack Dorsey. Plus, we've got an exclusive with the man who runs Sequoia Capital's U.S. business. Roelof Botha sits on the boards of Airbnb, Square, MongoDB, which is soaring this morning. He's going to tell us what the IPO pipeline looks like for the next wave of companies planning to go public. And Trey Vassallo is back with us today. The partner at Defy is hunting for early-stage investments. She's going to tell us what she's finding out here in the Valley. Trying to help you make some money in tech, and we will see you at noon. John, about 15 away.
All right, Scott, you've got the investor, Sequoia. We got MongoDB coming up here on Squawk Alley. When we come back, the CEO is going to join us when Squawk Alley comes right back.
Yesterday, my husband said I was...
Christmas, a time for celebrating, unwrapping and unwinding. Capture every moment with an epic iPhone 6S with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
This week at Tesco, buy 2 items from our chilled party food range, like tempura prawns or mozzarella sticks, and get a third one free. So for every 2 people you invite, you can ask another for free. But who? Linda from Accounts or Julio from Magaluf 2010. Tesco, delivering Christmas for 100 years. Cheapest item free selected stores while stocks last. Ends 1st of January.
Hey, tune-in listeners. Steve Kornacki here from NBC News. I want to tell you about a podcast I'm hosting called Article 2, Inside Impeachment. It's dedicated to bringing you the latest developments on the impeachment inquiry into President Trump. Every Monday, Wednesday, and Friday, I talk to NBC News reporters who are closest to the story to break down what's new, what matters, and what it means for the 2020 election. Search and favorite Article 2 Inside Impeachment on TuneIn.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown to Keenan.
Search NFL today.
Welcome back. Shares of MongoDB higher by about 2% this morning. The company out with stronger than expected Q3 results. Total revenue up 52% year over year. Joining us now to discuss the company's strong quarter and 2020 outlook, CEO Dev Ittycheria. Dev, thanks for being with us at Post 9.
Hey, John, thanks for having me back.
So, you're best of breed in this mega scale cloud world. How much of your growth is off of the small base? How much do you think you've cracked the code to navigating that space when people are trying to figure out which cloud provider to go with and which database to use?
Yeah, so you have to remember that we're going after one of the largest markets in enterprise software. This market's about $64 billion in size, going to about $100 billion in about 3 years. Why? Because every company is becoming a software company. More software means more data, which means more databases. So this market's exploding. And the incumbent technology is over 40 years old. It's the relational database, and that was designed in 1970. Oracle was founded in 1977. You're talking about a technology that's basically pre-cloud, pre-mobile, and even pre-internet. And so the world is looking for a new solution, and people have recognized that the document database is a much better way to organize data. And that's evidenced by the fact that we have almost 16,000 customers in some of the largest industries, some of the most sophisticated customers in nearly every geography. And actually, most recently, we just announced a customer, Axiata. It's a large telecom company in Asia that replaced Oracle with MongoDB to drive lower costs and more innovation.
I want to pick at this contention that with Atlas and with the move to the cloud, the fact that you're kind of revving the product more frequently, you don't need to spend as much on marketing. Amazon, which is a newer competitor to you guys with DocumentDB, I mean, they're spending a lot more on sales and marketing. They've kind of warned the street on that. I mean, if you don't need to spend as much on marketing in the cloud era, why are they spending so much? Are they doing something wrong? Or are you eventually going to have to start spending more and more as you chase more and more customers?
Well, we're investing a lot in marketing ourselves, actually in sales and marketing, because we're adding a lot of feet on the street. We're doing a lot of work around self-service. That means investments in our digital platforms and product-like growth initiatives. So we're doing that, but we're also partnering with the cloud vendors because they do have massive reach. And we work with Amazon, Azure, and GCP because our strategy is to let customers run MongoDB anywhere. So that enables them to have complete choice about what cloud platform to choose, as well as if they want to run on-premise. And the benefit to them is that they don't have to rewrite one line of code, so they have the optionality to move their workloads as their business conditions change, which is a really compelling value proposition for customers.
Speaking of business conditions, why are all of these CIO spending intention surveys so weak? And do you think they clear up if trade solidifies in the next couple months?
Well, I think for a company like us, we're going after such a big market. I mean, candidly, we have 0.5% share, and we're the new incumbent. So for us, that's actually doesn't really affect our business. We're rapidly adding sales capacity. We're investing heavily in our products. We're expanding our reach. We just announced a big deal with Alibaba in China. So we're really trying to promote MongoDB as a global data platform around the world, and our customers and our financial performance reflects that.
You mentioned the fact that every company is basically converting into becoming a software company or wanting to be a software company, how big this opportunity is and a market that's going to grow to $100 billion over the next couple of years. I understand how big the opportunity is right now in the near and medium term, but what happens once that conversion actually takes place?
Well, we have a long way to go, right? So I mean, even if you have, just to put things in perspective, if you have 5% share, we're bigger than a company like ServiceNow. So there's massive opportunities to create real value here. Enormous value here, which is, I think, why investors have been really excited about our story. But back to your point, the reason every company is becoming a software company is because your perception of a company is directly correlated to your experience with, say, a company's website or a mobile application, right? And so if your experience is poor, you perceive that company to not be very innovative. If it's very good, you view them to be very modern companies. So companies are investing a lot in software. Consequently, developers have tremendous power, which means that they choose technologies that make them more productive. MongoDB really helps developer velocity. And you see that, even at like Amazon show last week, we were one of the largest sponsors at show. Our branding was everywhere, and we had meetings with thousands of customers. And we do that with Microsoft and Azure as well.
But I mean, let's be honest, every company is not a software company, despite the fact that when software valuations are, everybody wants to say they are. I mean, every company that's got a physical location is not a real estate company, is not good at it. I mean, that's a key thing here, right, is that you're arguing that you're good at what you do.
Yes.
And that people should pay attention to that. How do you separate in this era when everybody wants to be tech? We've been through the WeWork stuff, and there's more coming. What technology companies really do and what companies that just use technology really do.
Yeah, so your point is that there's other companies who try and pretend to be software companies are not really software companies. That's not our issue. My point is that customers are using software to enable, define, or create their value proposition. You see that across almost every industry, which is why they gravitate to companies like us and to MongoDB, because developers have consequently a lot more power and influence about how technology decisions are made, and they want to use MongoDB to drive more velocity, which is why the largest banks, telcos, media companies, tech companies, startups are all using us to transform their business.
Right. Dev Ittycheria, CEO of MongoDB, day after earnings with the stock higher by a couple percent. Thanks for being with us.
Great to be here. Thank you.
Get a check on where the major averages stand on this Tuesday morning. We've been sort of all over the map, but currently pretty close to the flat line as we weigh a flurry of trade-related headlines all morning long. Squawk Alley's back in less than 3 minutes. Don't go away.
Step up, please. Empty your pockets.
Looks like you're all set for that business trip. You've got your smartphone, laptop, your other smartphone.
Is this all the devices you have?
Your tablet, seriously? Smartwatch, your backup tablet, and...
anything else in your bag?
Whatever that is. This isn't working. Introducing Samsung Mobile Workspace Solutions. With the Galaxy Note 10 with DeX software, you can run your entire business on the one device that does it all. Samsung Business Solutions.
You know we were playing around today? It's Christmas morning. Let's go. Riders around the world. Let's create some magic. We rise in 3, 2.
Our kind of joy feels different. This holiday, give the gift of Peloton.
Hi, I'm Barry Sloan with NewTek, your business solutions company. Does your business need money? Whether you need $15,000 or $15 million, you can count on NewTek. And with rates as low as 6%, you can see why so many businesses turn to NewTek. Contact NewTek, your business solutions company today.
Selling a home is expensive and stressful, so we set out to create a better home selling experience with a network of the most successful real estate agents in America that'll sell your home for as little as a 2% commission.
The icing on the cake with the Ideal Agent was that we saved $12,000 in commission.
They were so stress-free. The whole process was amazing, and I would definitely recommend them.
We are not a discount brokerage. These are top local agents that'll get you the best results.
I used to have more hair. I used to have more color. And I used to have cancer. I beat it. I did. Not alone. I used to have no idea what the American Cancer Society did. Research? Yeah. But also free rides to chemo and free lodging near hospitals. I used to maybe give a little, then I got so much back. I used to have cancer.
Please give at cancer.org.
If you've tried college but never finished,
SNHU lets you transfer up to 90 credits toward your bachelor's degree.
It doesn't matter how old you are, you can do it. You can finish.
Finish your degree at snhu.edu.
Brian Sullivan, Worldwide Exchange, 5 a.m. Eastern on CNBC. The halftime report out west today. A who's who of tech titans and investors. IPO outlook and strategy for 2020. Noon Eastern, CNBC.
Welcome back to Squawk Alley. SoftBank is pulling out of its investment in dog walking startup WAG. This, of course, comes as SoftBank's Vision Fund faces scrutiny over investments into unprofitable startups like WeWork and Uber. I don't know, guys. I mean, WAG has been under fire recently. It's also had some celebrity firepower until recently as well. I know Olivia Munn, the celebrity, the actress Olivia Munn, has been an investor and a participant in the company too. But I think probably the bigger focus here, the bigger issue here is the scrutiny on SoftBank and what it has chosen to invest in and why.
They put $300 million into this dog walking company. Also not a software company.
That's for them, that's money. That's literally couch cushion change. You know that, right? Yes, we're all aware of this.
Yeah.
We'll see what the aftermarket after the bell brings. Dave & Buster's and GameStop, just a couple of minor names that continue to post earnings. Let's get to the judge in a special edition of the half.
Carl, thanks so much. I'm Scott Wapner here at One Market in San Francisco as the halftime report continues its look at tech investing in the year ahead. Another great lineup for you today, starting with two guys who used to be at the top of Twitter. Former CEO Dick Costolo and former COO Adam Bain. They now have an investment fund together focusing on private software companies. They join us today in a CNBC exclusive. It's great to have both of you here.
Thanks for having us.
Nice to be back. We've been coming back, once a quarter to see what's going on with valuations. When we were here in September, you told me that things were very frothy.
Yes.
A lot's happened since then.
The WeWork S1 had just come out a couple weeks earlier.
And we know what happened with the WeWork blow up. Yeah. So where are we today?
Well, I think that, there's been the sense, as you just saw it with the WAG news, there have been these companies just have raised an extraordinary amount of money and have been pitching themselves as tech companies that really weren't tech companies. WeWork was not a technology company. WAG is not really a technology company. And the combination of trying to get these technology valuations on companies that shouldn't be trading that way and companies that are just raising too much money and have no financial discipline, hopefully some of that is coming to an end, but I still think valuations are going to be pretty crazy for a while.
What do you think?
Look, I think if anything, this signals the beginning of the end of these shoot the moon sort of business plans. And what I mean by that is they don't work for two reasons. One, companies are raising a tremendous amount of money, and they do that primarily to try and have some sort of competitive advantage versus their competitor. But all that does is actually just drives more money, more funding to the competitor. So it actually makes it easier for the number two to raise money, not harder. And then look, I think on the second issue really is that once you are running one of these companies, you realize that running a company is all about managing habits. And if you have a habit of managing a company at a really high burn rate, it's very hard to then make a right-hand turn into fiscal responsibility. And so if you've raised the money, the capital's sitting in the bank, you're going to end up spending it. And I think that's part of the problem is you heighten the risk that you're not going to make the metrics for the next round. The public markets are beginning to obviously figure this out. You can look back at this year, go look at Zoom as a great example of a company that went public, had great metrics, was growing over 100% year on year, had great net dollar retention, but also was free cash flow positive. And from a performance standpoint, that stock today, I think, trades at 40 times sales and 400 times forward earnings. And the reason why investors give it that leverage or that latitude is primarily because it's working on the unit economics.
Just to jump on that, I think the retail investors, public market investors have gotten a lot more savvy about the difference between growth with great unit economics. So Amazon, if Amazon's not profitable for a couple quarters, we now know, and we've learned the lesson, Amazon knows the day it wants to be profitable, it can spend less on marketing or cut back on R&D and drive tremendous profits. Growth with great unit economics, like an Amazon or a Zoom, will pay for that. growth at all costs with poor unit economics while you're seeing a bunch of these companies trading below their listing price.
I mean, that's over now, though, right?
Yeah.
Growth at any price. Can we say that's done?
I think growth without unit economics that work, people are onto that, and I think that's going to be over, at least for a while.
It's no wonder you guys talk about Zoom. It's no wonder if you look at the best performing IPOs of the year, Zoom's like right up there, second best. I mean, the stock's up 81%. Sure. If I had told you at the beginning of the year that Uber and Lyft were going to do so poorly, and that Beyond Meat was going to be up 200% or thereabouts, and Zoom and CrowdStrike would do so well, you would have told me what at that time?
Well, look, I think Zoom and Datadog have two very unique, specific attributes about the companies, in that they're SaaS companies with great recurring revenue streams, have high net dollar retention, which means if the business stopped today, it would keep growing from a revenue perspective just from its current customer base. And then they both were free cash flow positive. And so I think both of those things show that those are good plays. I think the issue with Uber and Lyft ultimately is a bit of this, you're trading on someone else's capital for a bit. Uber and Lyft essentially have massive stipends and bonuses that they pay drivers and drive the incentive wheel in that way. If they take that away, ultimately both of those companies will be highly profitable. It's just a question now of who moves first.
You think there are a lot of pretenders out here? I mean, so by that I mean,
generally speaking,
John Ford just asked the Mongo CEO, and we had this conversation yesterday with Frank Slootman of Snowflake about software's the latest and greatest and hottest thing, and everybody's a software company. Yeah. When in reality, that's not actually the case. People are pretending to be something they're not, as you sort of alluded to. But everybody's calling themselves a technology company, whether they are or they're not.
Sure, because the multiples on these software companies and the multiples on these profitable SaaS companies are so tremendous, everyone wants to sort of paint themselves that way. The reality is, exactly as you mentioned, a lot of them aren't. WAG, and look, in hindsight, this thing sort of seems sort of obvious. WAG should have never raised $300 million. It was a good business. It was a decent business. Could have been a nice, profitable business of a certain size. You pour too much money into these companies, and it just sort of ruins them.
It's a SoftBank effect out here, as we talked about before, and that's sort of where and why we are where we are in some respects. Is that true?
Well, look, I think one of the things that's now driving it is the employees are recognizing what's actually happening. And when these companies raise a tremendous amount of money at a very high valuation, it used to be the case that was celebrated. I think employees now realize that comes with risk. Right. And it's the employees that ultimately are left holding the bag. And here's what I mean by that. When investors go pour a bunch of capital into a business, they ultimately have preferred shares and probably liquidation preferences. Right. The employees are sitting uncommon. They're sitting on the bottom of the stack. And so I think people are now starting to realize that more capital, especially raising more capital to do uneconomic things to drive market share, just don't work.
You guys have a new fund. Are you being more selective in the kind of companies you look at and the amounts of money you're willing to throw around?
I think from the beginning we had a perspective that unit economics and existing product market fit were going to be important to us. We try to avoid companies that are, hey, growth looks great now, and then this miracle is going to happen when we do this thing that we aren't really sure about yet, and that will cause the unit economics to fall into play, and then we'll be profitable. We stay away from those things. You see those in some of the companies where the unit economics don't work now that are public. The pitch is, well, this and this and this are going to happen, and then the unit economics will be great. We tend to stay away from those things.
And we have done a bunch of enterprise software so far this year. We just haven't seen anything that we like massively well yet in consumer. Usually, from a trend perspective, that means something great is around the corner, but just haven't seen it yet.
Yeah, these things tend to go in cycles, and it's been a dry spell in consumer for a little while now on the private side, and that'll change.
We've touched on the SoftBank issues, and you mentioned WAG. Deirdre Bose has been chasing down these latest stories and her reporting, and as if the drop in Uber and then the WeWork blow up wasn't enough, there's more for SoftBank today.
Yeah, WEG just the latest, and Adam, we were talking about this just before we came on TV, but it's sort of the perfect example of VCs pointing to Masasan and SoftBank and saying, what are they doing? This is evidence that they don't know what they're doing. And it's also a good example of taking perhaps more money than you need. Yeah. WEG initially was looking for $75 million. SoftBank offered $300 million. They didn't do what they were supposed to with that money, or they couldn't get those unit economics to work. So they've laid off, I'm told, 80% of their workforce from the beginning of the year. SoftBank is selling its stake back to the company, but of course it's not the only one, right? There's sort of worries bubbling about some other vision fund portfolios. You see, you guys are talking about looking for more profitable companies or with paths to profitability. You see losses accelerating. Places like Didi Chuxing, right? The Chinese startup that has money from SoftBank. Coupang, which is the Korean e-commerce site. OneConnect, actually, there's going to be another SoftBank IPO this week at a much lower valuation than SoftBank.
When you hear Vision Fund 2 is full steam ahead, does that make you worry? Do you roll your eyes and say, do we really need another Vision Fund? How do you react to that?
It does make me worry. It does make me roll my eyes. Those are two different things. I think if you're a Vision Fund 2 prospective investor, a good question you should be asking yourself is why. I don't see it.
You don't see the need for
no, I mean, it's just, look, we're seeing what's happening. You bring in $100 billion, you got to put the money to work because you're drawing fees on $100 billion. So your investors, your LPs, want you to put the money to work. So you end up trying to find places to put an extraordinary amount of money to work, and those companies are taking too much money and they collapse under the weight of that cash. As Adam mentioned earlier. It creates all sorts of bad habits when you have too much money, and those habits are hard to change.
Do you share Dick's view on that?
Yeah, totally. Mine is even now, after going through the process of raising our own fund, I look at $100 billion and the things that you can do with $100 billion. You can literally change the face of technology and humanity with $100 billion, yet you chose to invest in a dog walking service. I love dogs. We all love our dogs. I'll show you a picture of my dog at the end of this.
I'm trying to make sure he doesn't get yelled at on Twitter right now.
But with that kind of firepower, I just question why you would go invest in things that wouldn't further humanity than just further your dogs.
I'll play devil's advocate here because I know, especially being here in the Valley, I know that a lot of VCs, it's easy to rag on Masasan, but
especially now, sort of kick them
exactly.
Down
but this is the guy who made a bet on Alibaba that has made him one of the richest men in the world. And if you look at these returns from the Vision Fund, at least he says we don't get a full view into it, but he says they're double the average VC returns. And you also take a look at where they're winning and losing: transportation, real estate. They're losing big there, but they're actually doing pretty well on consumer, which makes up 20% of the Vision Fund, health tech, enterprise as well. So it's not so black.
Yeah, my take is not actually on the Vision Fund, though I think it's they weren't being smart around allocation of that capital. My fault, if you ask who's to blame, is actually the CEOs that took the money. You're not putting a gun to the head to the CEO to take the money. They decide to ultimately take the money. They take the capital and they take it at a very high valuation. It ultimately then has this high risk reward game that they're playing, and oftentimes what we're seeing is it's just not working.
Isn't that what this is all about?
No,
out here though.
No,
you offer the money, you take the money. You're trying to grow your business.
I think the point Adam makes, you see CEOs, particularly first-time CEOs, optimize for valuation over everything else repeatedly, and it's like this classic mistake of, well, the way everything is measured out here is by valuation, and if I raise this much at this valuation, that means I'm better than this other thing. It's just not the case. You create all sorts of problems for your company. You have to, you're way out over your skis, so you have to drive growth to try to catch up to the valuation. That causes all these unit economics problems or spending habits that are hard to correct later. I think Adam is 100% right, and not taking anything away from Masa, in addition to Alibaba, Yahoo Japan, and going all the way back to that, and before, the guys made bold and courageous decision after bold and courageous decision. Just think that Vision Fund 2 is, we're seeing some of the results of Vision Fund 1, and I would just question whether that's a good place to put so much money to work.
If you could say, all that's happened, there was a needed reset out here. And if it's in the process of happening in some respects, Vision 2 potentially delays the process of a full reset, doesn't it?
Correct. Yes. Yes, 100%. Because it just means that, hey, free and excess capital is readily available that will need to find a home and will find a home.
So if you were going to, the party is about to end, let's come in with trucks of champagne. Here we go again.
Well, look, part of the issue, too, is it's not just coming at the very end of companies' financing history, which is where the Vision Fund traditionally played, but also out here, there's a tremendous amount of capital at the early stage as well. So it really looks more like a barbell where you've got a lot of capital early stage to fund companies, a lot of capital late stage as well. So it really means this middle part of the company's history, I think, is where the company will win or lose. So that management part in the middle is really the key.
To jump on something Adam just said, we see, because these companies tend to be close to public or just newly public, the results of the Vision Fund investments. There's a lot of, excess investment and valuation in the early stages. There are Series B round here. Company raises a seed round, then goes and raises an A, and then they get product market fit and have a bunch of customers and go and raise a B. The Series Bs are happening now at big numbers, hundreds of millions of dollars in valuation before the first customer is live. That's just as crazy.
There was a recent Series A for $200 million led by Excel, but they say better path to profitability. But I have a question for you guys. Would you be comfortable taking the other end of a SoftBank bet, investing in a company where its competitor is going to get $100, $200, $300 million from SoftBank?
If the unit economics, I don't think that. The short answer is yes, because there's capital available to management teams that execute well. And you don't have to worry about the Vision Fund's the only place you can go raise money. So if you're competing against them, you're out of luck. That's simply not the case. So if you're a great management team and you're a disciplined management team and you're growing EBITDA and you've got growth with great unit economics and a path to profitability, you're not going to have any problem raising money.
I want to pivot, and thank you so much, Deirdre, for joining us again today. Let's pivot and talk about Twitter, if we could. The latest news is Jack Dorsey says he's moving to Africa. He's still running Square and Twitter. You were COO there.
Yeah, you answer this question.
I'll get to you in a second. Would you have let that fly?
Well, look, if you want me to try and defend it, here's what I would say. And here are the facts. 75% of Twitter's audience is outside the U.S. About half of its revenue is outside the U.S. Most of the user growth and revenue growth has been coming outside of the U.S. Like it or not, while this is a U.S. HQ'd company, most of the action for this company, I think, is happening outside the U.S. Tough for us sitting here, or tough for some of us sitting here in San Francisco to think that it's not the center of the universe, but the fact is it's not. Couple that with the idea that Jack, I think, is looking at Africa as a huge growth vector for the company, both ultimately and I think if you ask him, his perspective will ultimately be around users and revenue. And then lastly, I think he's got a view that he has to figure out some way to decrease the hiring pressure here in San Francisco, and so by creating a more remote workforce, and he may lead by example. I think the question ultimately may be for some investors, not that he's deciding to go live overseas and study culture there, but actually the market that he picked. And it may be the case that some investors in Twitter may ask that he go spend another 3 months over in Japan. Why Japan? Twitter's bigger than Facebook in Japan or any other market or any other competitor globally. And so if you could figure out, or in Japan, so you could figure out what's happening right in Japan and export it across the rest of the world, that would be time well spent.
So, I mean, I didn't want you to defend it or
in fact, that was the genesis of the 280 characters expansion, was understanding the way it was being used in Japan, and based on the character set in Japan, how tweets were being engaged with, and that the tweets at a larger character set were being driving higher engagement, ended up being the driver of the 280 being rolled out to the rest of the world.
You have a problem with this? Yale's Jeffrey Sonnenfeld calls the decision, quote, reckless, says it's, quote, irresponsible and negligent of the board to allow it.
I think the board, and I'm sure the board and Jack are going to have a conversation about that tweet. I think that, I'll say this, and I mean that seriously, I'm sure the board and Jack are going to have a conversation about that.
And I haven't even read you the Galloway, Scott Galloway stuff.
I'm sure I can guess what that says. I'll take a little bit of a different angle to what Adam said, just to try to be, dramatic. Jack likes to test out ideas publicly. If you remember, he wrote a blog post, or maybe Sarah Fryer published it when Sarah left Square, the CFO of Square left to become CEO of Nextdoor. Jack or Sarah, one of them, published a sort of, here are the things that Jack said to Sarah upon leaving. And one of the things that Jack said was, you have to be willing to fail in public. And Jack will try out ideas and things that he's thinking to himself publicly, first, before discussing them privately with other people. And, that's just who he is.
Was this a jump the gun decision? Here's what Professor Scott Galloway tweeted, okay? And he wrote an op-ed as well. Quote, Jack Dorsey's a part-time CEO. 85% of his wealth comes from his afternoon job, Square. It's difficult for people to work evenings and weekends when the CEO works mornings and then moves to another continent. Jack must be replaced.
Look, as I said, I'm sure Jack and the executive team and the board are going to have a conversation about where the appropriate place to live is and how long you should spend there.
But do you think he should go or not?
Well, no, you can't. I'm not going to sit here. I think Jack's done a terrific job with the team in the company. The team there loves him. The people who work there, you can see it on Twitter. They all appreciate working for him. The way the way he thinks about the company, the way he articulates. I have said this many times on here. Jack speaks with the fluency of the inventor of the product, and that's a powerful thing in a company, to have the inventor of the product standing up and talking to you about how he thinks about it and how that contrasts with how he originally thought about it. There's no one who has more authority than that in the company.
Does your answer to the question mean that if he leans over to you in the cubicle door and says, Adam, I'm thinking about going to Africa, you said, great, can I drive you to the airport? You're cool with that? You're cool with it?
Look, I think, I'm not there, obviously, at the company, so I'm not cued in to what's actually the conversations are like. I will say Jack's got an incredibly deep bench, and he often goes, in fact, he spent, I think, a bunch of this year traveling around the world, meeting with Twitter partners, Twitter advertisers, and Twitter employees as well, to get a more global view. That said, I understand the critique for sure, and I'm just giving you the other point of view.
Let me just ask you this, as we move away from that, but onto Twitter itself. Year to date, the stock's up 5%. NASDAQ's at a record high. Everybody's feeling good about tech. The President of the United States is prolific on Twitter. He tweets his points of view. He tweets policy on Twitter. And the stock is a dramatic underperformer. Why? What does that tell you about the monetization capabilities of Twitter or lack thereof? What's the issue in that 5%?
Well, interestingly, on the last earnings call, user growth was up based on their new metric, monetizable which I don't fully understand the definition of, although I could guess at what it is. User growth was up tremendously according to that metric, and apparently revenue, according to the team on the call, revenue was down due to an issue they had with their direct response ads, application installs and the returns on application installs that seemed to have something to do with, how they were attributing or how they were, assigning value to people who had clicked on an ad. So I'm not sure what's going on there. I would expect that you'll get a lot more clarity around that coming out of this next quarter. And if user growth continues to be as tremendous as it was last
Christmas, a time for celebrating, unwrapping and unwinding. Capture every moment with an epic iPhone 6s with a 12-megapixel camera, now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile, every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status, terms apply. See
Christmas, a time for celebrating, unwrapping and unwinding. Capture every moment with an epic iPhone 6s with a 12-megapixel camera, now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile, every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status, terms apply. See tescomobile.com/terms.
Welcome back to the Halftime Report. I'm Dominic Chu with a market flash here on shares of Peloton. Those shares are sinking, down 6% after a negative note out from Citron Research, which set a $5 price target for the year 2020. Now, the firm says Peloton has, quote, obvious comparisons to GoPro and Fitbit, and that the company depends too heavily on fitness trends and fads. Citron says the firm's management has been overly promotional to justify Peloton's valuation, saying it is, quote, disconnected from all reality in the post-WeWork economy. Now, we have reached out to Peloton for a comment on this Citron report. We've yet to hear back, but Scott, those shares are on the move on the heels of that short seller report from Citron. Scott, I'll send things back out to you in San Francisco.
All right, Dominic Chu, we appreciate that very much. Our next guest runs Sequoia Capital's U.S. business. Roelof Botha's early investments include Instagram and YouTube. He's also currently on the boards of Square and MongoDB, and he is with us exclusively today. It's nice to see you. Welcome.
Thank you for having me.
Happy day for Mongo, right?
Very.
We just had the CEO, and I guess it comes down to a path to profitability, a smaller than expected loss, and that's what the market seems to be cheering today. That speaks to kind of the overall environment we're now finding ourselves in.
Absolutely. I think people are focusing on unit economics. It's important for people to have a clear path to profitability and growth at all costs. I think those days are numbered.
You're a shareholder of Mongo, right?
I am, yes, through a Union Square Ventures investment way back when.
So this can we call it a turn? I mean, is it a recent turn where the market seems now to be more focused on, as all of you, I think, have used these terms today, unit economics more than anything?
It is a recent turn, but it's episodic. I was the CFO at PayPal many, many years ago when we first went public. And
Part of the mafia.
Part of the mafia. And we raised $100 million in March of 2000 at a time the company had no revenue. And we did silly things because we had money in our pockets, and there wasn't a real focus on unit economics back in those days. And we had to get religion when the market dried up. And I think you may see something similar now where people need to focus on profitable growth.
You told our producer something really interesting. I want to read it for our viewers and then expand on it with all of you. Quote, there's tension right now between the fear of missing out and the fear of looking stupid. Which is weighing more now on the scale? Which is winning out?
Fear of looking stupid is starting to weigh a little more heavily in that equation.
Yeah? As a result of WeWork and some of these other issues that we've had?
As a result of that, some of the other news today with what's happened at WAG as well, I think it's a real test to your resolve as an investor when you look at a business and other people are affording it very high valuations. The business seems to continue to raise money, but you don't quite understand it. And you check yourself and you have a lot of self-doubt about your judgment. And so that leads to a fear of missing out. And I think people become momentum investors.
Yeah. Is there too much money sloshing around out here? We're just talking about Vision 2 is down the pike. You guys, obviously are huge players here.
I joined Sequoia in 2003, and I think at every limited partner meeting I've been at, we've said that there's too much money in Silicon Valley. So I think
it's a good problem to have, but now we've literally seen valuations get pushed to the stratosphere when in reality they should never have been.
The key is to focus on the long run of the business. We partner very early with companies at the seed stage typically, and we help them as enduring business partners. We're actually involved with companies on average longer than a marriage lasts in America. So it's typically, I've been on the board of Square for a decade now, and we continue to hold our shares. So we look for the long run in all these businesses, and in the long run, the valuation will take care of itself.
I'm glad you brought up Square, because I hope you heard the conversation that we were having about the CEO, Mr. Dorsey, moving to Africa. Are you in favor of that? Should he go?
Jack is an incredible CEO, and when he informed us at Square that he was taking on the CEO job at Twitter again, we had a conversation about it, and Jack asked us a great question, which is, evaluate me on the results. And Jack has built phenomenal management teams at both businesses and has a great expression about companies have multiple founding moments. And these companies are both thriving because of his ability to build management teams. These companies are both worth north of $20 billion. It's incredible what he's done, so it's a little bit strange to me to see all the critique. And he's also a huge champion of remote work. And I don't think you need to be present physically in the office every day to be an incredibly effective CEO.
You don't think at some point he needs to make a decision, though? It's these businesses now are more mature than they were when he turned to you and the board and said, I'm thinking about doing both. This time's different than then.
I'm not sure that's the case. But both companies are flourishing. He's able to provide incredible vision and leadership and motivation, and he has fabulous management teams, and he's empowering them to help run great businesses.
The founder culture, I think, is a natural place to go next. And it seems to be under more scrutiny than ever. With what happened with Adam Neumann at WeWork, here we are talking about Jack Dorsey. And maybe it comes in cycles. Whereas, when the Google guys needed an adult in the room, you brought in Eric Schmidt. Then there was a return back to the founders. And are we finding ourselves again in a period where we need more adults in the room, so to speak?
I mean, Roloff used the term episodic about unit economics. It's the same thing with it was when Jeff Weiner and I was running Twitter and he's running LinkedIn. You have this, it goes in waves, you need to bring in someone who's an operator to run the company and takes over from the founder. And then it sort of swings back to, no, only the founder who understands the original vision for the platform gets the right person. It's funny. It just bounces back and forth out here. I think because of some of the things we've seen recently, probably with WeWork and others, you're going to see more of oh no, we need to go back to having a professional operator in the room. It's not just all about the founder, but it's sort of funny to people who are out here and have seen it happen 4 or 5 times. It really bounces back and forth.
Where do you come down on the issue of direct listing versus a traditional IPO? Obviously you were at Twitter, did a traditional IPO. Your new company, Virgin Galactic, just did a direct. You have companies in the pipeline that are going to have to make a decision, one versus the other. Is the pendulum starting to swing more towards direct listings, and will that be the trend of the future?
I think it's wonderful to see innovation in the listing process. I took a company public as a CFO in the traditional approach. It's imperfect, and I welcome the idea that there's innovation, that we can question some of the assumptions that brought us to where we are. But at the end of the day, what matters is the quality of the business you build. The companies we're involved with, whether it's Google or think about Square or MongoDB, more than 80% of the market value accrued after the IPO. And what really matters is, are they building a good business? And that was just a day in the life of the company.
I think the point that Bill Gurley from Benchmark made about direct listings when he was on the show recently was, look, the underwriters aren't really underwriters anymore. They're not putting any of their own money at risk. They're taking extraordinary fees for not putting any of their money to risk. And here's a way to stop that. So I'm kind of on the same page as Roloff as there's for sure room for innovation. The roadshow is a ridiculous process and should be improved upon. The roadshow a couple weeks before going public. And if direct listings are one way toward that, and some things like the long-term stock exchange, Eric Ries's new company, is another vehicle. I think those things are all great, and the more the merrier.
You let your actions obviously speak for themselves with the DL that you did.
Yep. I think there's multiple ways to be successful, and so ultimately what's happened, to Roloff's point, is a ton of innovation in a space that had largely been stagnant for the last 10 years or so. I think it's a super compelling, direct listings I think are a super compelling way to go out. However, they have a drawback in that you don't raise primary capital for the company. It just goes out the door. And so the company itself doesn't raise capital as part of the process. So it's not for everybody. Most of the time, companies go public because they want to tap that capital access. The direct listing that we did is another interesting vehicle, partly because it does have some of the advantages of a direct listing and some of the advantages of a traditional IPO, in that Virgin Galactic raised a large amount of capital that they couldn't have done, say, through a direct.
You were an early investor in Airbnb, correct?
Correct. We met the founders. There were just the 3 of them. They had 1,000 listings at the time. It was still called Air, Bed and Breakfast, by the way. Now they have 7 million listings. So yes, it's been a while.
And should we expect a direct listing in 2020? Is that where we're heading?
Unfortunately, I can't comment on that.
Okay. Well, it certainly seems to be one of the things the company is considering in this maybe new way of going public. We'll take a quick break. We'll come back with these 3 gentlemen. And first, let's get to Deirdre Bosa with a market flash on Google. Hey, T.
Hey, Scott, Google's $2.1 billion acquisition of Fitbit will face scrutiny by the Department of Justice amid data privacy concerns. This is according to a report in the New York Post. Now, this comes just days after the deal was cleared for review by the DOJ. Fitbit shares, they fell on the news, but they're rebounding a little bit. Now, the report says that the DOJ and the FTC are worried that Fitbit, if owned by Google, will give Google even more access to consumers' private data, including sensitive health information. Remember, guys, that the DOJ is already also investigating Google for broader anti-competitive issues. Back to you.
Okay, Dee, we appreciate it. Thank you. That's our Dee Bosa here. Let's get to Sue Herrera now, who has the headlines for us. Hi, Sue.
I do indeed, Scott. Thanks so much. Here's what's happening at this hour, everyone. House Democrats claiming victory and negotiating changes to a U.S., Mexico, Canada trade agreement to ensure better protection for workers. It was formerly known as NAFTA.
There is no question, of course, that this trade agreement is much better than NAFTA. But in terms of our work here, it is infinitely better than what was initially proposed by the administration.
ExxonMobil prevailing in a lawsuit accusing the company of downplaying the toll that climate change regulations could take on its business. The judge saying the New York Attorney General's case did not prove the company deceived investors. ExxonMobil hailed the ruling in a trial that it said stemmed from a baseless investigation. And Finland's parliament choosing Sanna Marin as the country's new prime minister, making the 34-year-old the world's youngest sitting head of government. Marin is heading a 5-party center-left coalition. The 4 other parties in the coalition are headed by women, 3 of whom are in their early 30s. You are up to date. That's the news update. Scott, back out to you.
All right, Sue. Thank you so much for that. Much more with Roloff Bota, Dick Costolo, Adam Bain. Straight ahead. Plus, we want to remind you, coming up tomorrow, we have another big show for you from Los Angeles today with Double Lines. Jeffrey Gundlach, the halftime report from San Francisco, is back in just 2 minutes.
Christmas, a time for celebrating, unwrapping and unwinding. Capture every moment with an epic iPhone 6S with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
Wow, that was the most beautiful bit of film I've ever seen.
Eh?
What performances! Did you see the pups' faces? They loved it.
But
such emotion, such intensity.
Sergey, it was an advert for snacks.
I don't remember the last time I felt so moved.
Oh, boy.
Oh.
Enjoy 2-for-1 cinema tickets from Meerkat Movies when you buy through Compare the Market.
Qualifying purchases, Tuesdays or Wednesdays, participating cinemas, 2 standard tickets only, cheapest ticket free, T's and C's apply.
This week at Tesco, buy 2 items from our chilled party food range, like tempura prawns or mozzarella sticks, and get a third one free. So for every 2 people you invite, you can ask another for free. But who? Linda from Accounts or Julio from Magaluf 2010. Tesco, delivering Christmas for 100 years. Cheapest item free, selected stores while stocks last, ends 1st of January.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught, it is in for the right side for the touchdown.
Search NFL today.
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
We're live once again today at One Market in San Francisco. Former Twitter CEO Dick Costolo, former COO Adam Bain here, and Sequoia's Roloff Bota continue the conversation with us. Let's talk about the food delivery space. Sequoia is in DoorDash, and And there's been a lot of competition, a lot of conversation about what the future of that space holds. Postmates, are they going to go public next year? Grubhub hasn't done well. Can all of these companies survive on their own, do you think, or does there need to be some consolidation in the future?
I think there's room for multiple winners in this space. It's actually incredible when you think about the emergence of this category of food delivery. I mean, it's a market that didn't really exist 5 years ago. And here we are with multiple companies doing really, really well.
I didn't even mention Uber Eats. I should throw them in the mix, of course.
Yes. So we invested in DoorDash at the Series A. It was a very raw early stage company. The founder, Tony, is a phenomenal operator. And talking about the focus on unit economics, part of the earlier conversation, one of the things that Tony did was really focus on unit economics. Firstly, at the delivery level, then at a city level, because even if you're profitable on a delivery basis, it's too expensive to run in a given zip code or a city level. And the company really focused on achieving great unit economics before they raised enough money to really accelerate growth. And so they're flourishing, they're taking market share, and they're the leader in the US now.
But do you really need Uber Eats, Grub, Postmates, DoorDash? Does that make sense to you guys?
Which is now part of one of the other.
Does that make sense?
One can imagine that 5-7 years from now there are probably less than all of those. But I do agree that there's room for more than one.
The question is whether more than one or more need to be on a bigger platform that can help absorb some of the financials that obviously it takes to be a big competitor in this space.
Yeah, look, I think one of the stress points that's starting to emerge are actually at the restaurants themselves, which aren't technically, technology companies, yet are now being forced to figure out integrations. If you go walk into a restaurant, you'll see a line of the delivery folks on the side waiting for the food. And so you start to wonder if there's a better way, which gives credence to the ideas around cloud kitchens and some of the other technology that's moving in the space to help restaurants, get better at managing the demand.
But there's also Square is helping solve part of that problem, by the way, because they have integrations that make a single. Their point of sale system enables all the different delivery vendors to be integrated, making it a single point of integration for the restaurant, making their life a lot easier.
Let me leave you with this final question. If you can say look ahead to the year ahead, the biggest story in venture capital, or the biggest story to emerge out of Silicon Valley in 2020 when it comes to trying to make money is going to be what, do you think? This continued reset? Are we still going to be talking a year from now about froth, or are we going to come back down to earth, do you think?
I think we're going to come back down to earth.
You guys agree?
It seems headed that way.
The market will be more sane in 2020.
All right, well, we shall see. We'll visit with you again on one of our visits out here. Thanks so much for being with us today.
Thank you.
Roelof Botha again with Sequoia Capital. Up next, we're joined by Trey Vassallo of Defy Partners. She was an early investor in Nest. We're going to find out what is on her radar today when we come back from San Francisco on the Halftime Report after this.
Christmas, a time for sharing gifts and laughter, and photos and videos. Make the most of it with a SIM-only deal packed with data from Tesco Mobile. Like a 10 gig SIM for just £13 a month. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile today. Tesco Mobile. Every little helps.
Ends 29th of December. 12-month contract and unlocked 4G-enabled phone required. Terms apply. See tescomobile.com/terms.
Make their Christmas wishes come true. Whether they love Disney's Frozen 2, want to jet off on Barbie's Dream Plane, or ready up with the Fortnite Battle Royale collection. At littlewoods.com, you'll find all the toys they love, all with inclusive delivery and free returns. Own Christmas. Shop now at littlewoods.com.
Christmas. A time for celebrating, unwrapping, and unwinding. Capture every moment with an epic iPhone 6s with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
Hey, NFL fan, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can listen to every NFL game live as it's happening.
Sean McCoy has an opening on the right side, plunges into the end zone for the touchdown. touchdown.
Or catch it later on demand.
Offset backs behind Mahomes. The give is to Williams. Starts right, cuts it back to the left, and blows into the end zone for the touchdown.
You call the plays. Follow the NFL anytime, anywhere, all season long with TuneIn Premium. Upgrade today.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Pascal gobbles up the rebound and slams it down.
Get your favorite NBA team right here on TuneIn.
A step back, deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
Welcome back. Our next guest was an early investor in Nest, continues to look for early stage opportunities as managing director of DeFi. Trey Vasallo back with us here at One Markets. Nice to see you again after so many months.
It's good to be back.
What is exciting to you these days in the tech landscape?
Yeah, well, there's a lot to be excited about. One thing that we do as an early stage venture fund, given that there's so much oversupply of capital, is to try to not chase the shiny object. And so we're really looking for places within the industry where technology hasn't quite created innovation yet. So, for example, logistics is one of these areas where we're seeing some incredible companies like Flexport, but there's a lot more opportunities for us to bring a little bit of data, a little bit of AI, connect a lot of great disparate sources together and make real change. One of our best performing companies right now is a company called Airspace that's doing just that, and we'll have more coming.
So leave the shiny objects to everybody else, these guys in their new fund. Commerce, infrastructure, security, fintech, AI, marketplaces.
Yeah.
Those are the hottest places to be in the years ahead?
Well, it's certainly the places where we're investing. And I think there's a lot of different strategies, and there are big billion-dollar funds that can throw a lot of money at companies that are using kind of the capital as a moat strategy to just try to get out ahead. And so what we're trying to find are places where data and software actually truly unlock a lot of value, where the unit economics make a ton of sense, and where we can really grow in an economic way. One of the things that we talk a lot about is that scarcity actually creates innovation. And I think we've been hitting on this point a lot here, is that if companies raise too much money too early, then they actually can just buy their future as opposed to actually innovate around what they need to do to create a great company.
We visited with you on one of our first trips out here, so it's been several months.
Yeah.
Now, as you take stock in the year that was out here, what do you make of all of it? Everything that we've seen?
Yeah, well, I think there was a lot of conversation around when is the party going to end? And I think we've actually started to see some of the coming back down to earth, as you mentioned earlier, around, it shouldn't be growth at all costs, and not every company should be painted as a tech company. And so I think that's really healthy. As an early stage investor, we're typically investing in companies $3 to $10 million. The valuations are usually sub 50. But as those companies scale and raise money, where that hurts us is if they get way out ahead of their skis, raise too much money at too high a valuation. Then what happens is they have to do a down round, early investors get squeezed. So I think everyone in this economy really appreciates more rational valuations and more rational growth.
You have a question?
I just think that, a lot of the thing you have to realize right now is a lot of the CEOs and first-time founders and CEOs today, they haven't been through a market downturn. So they're like, of course I'm going to go raise as much money as I can at the biggest valuation possible, because what could possibly go wrong? That's just setting me up for doubling it again 18 months from now. And, for those of us who have been through one or two of those, when it hits you hard and it comes at you fast, and you got to change course immediately. And as Adam said earlier in the show, you can't just change your spending habits overnight. You got to work them out of the system. And so for people who haven't been through it, they're going to continue to make these mistakes until they get hit in the face.
Are you scrutinizing when you're giving me that first answer I was thinking about? You must be, because you're at such an early stage.
Yeah.
You must be scrutinizing things more heavily. The business itself, the unit economics, but maybe more than anything because you're being sold on a story.
Yeah.
And it's the story that you need to vet more than ever.
Yeah, we need to believe that they're actually transforming an industry that has an incredible amount of upside. And the reality is that when we're investing, there's some data, but not a lot of data. And you get some early false positives. There are things that might show in the data that don't actually pan out. As early Series A investors, what we like to say is that they have hints of product market fit, but that you actually really have to dial that in. So we tend to work really closely with our founders about really understanding how are they finding their customers? How do we really drive better unit economics? And it's not throwing cash at it. It's figuring out how do we create more organic growth? How do we create a better sales opportunity? How do we create better retention? And so that's, having a product background, that's what I really love about, our opportunity to work with companies in the stage we're at, because those things all have to be relatively figured out by the time we're raising that next round.
A lot of early stage venture is, spotting those, what's the line? Spotting the good ideas that look like bad ideas, right? That's
almost laughable.
Yeah. And so how do you think about that? The person comes in and they pitch it to you. Look, I famously, or maybe not so famously, but it will be after this, I went for a trail run with Travis Kay in fall of 2009, and he asked me to put a little bit of money into the seed round of what was at the time called Uber Cab, and I told him it was a horrible idea, and it passed. By the way, we didn't tell that story to LPs when we were out raising money for this fund. But, how do you think about, boy, this sounds horrible, but the more you think about it or look at it from this other angle, the world will change and it'll be great.
Yeah, and that is always the hard thing about investing. I think earlier you were talking about fear of looking stupid. And in this industry, oftentimes taking a risk on a company at this early stage, you really do have to confront, gosh, I could look like an idiot investing in this company, because sometimes the most innovative large companies really are kind of crazy when you think about it in the early days. And it's just not obvious until later.
The enterprise versus consumer space, there's a great divergence in some of the performances of IPOs, over the course of the year. How do you think about one versus the other, one sector, if you want to refer to it as a sector versus the next?
Yeah, no, I love this question, because I actually think it's kind of an old school way to think about the market. What company is purely a consumer company? Even Facebook has enterprise sales on the back end. And so we've actually taken a fairly differentiated approach in that we look very broadly, and it's a spectrum. And in fact, many of our companies, enterprise companies that sell to the end user, that's a consumer-like sale. There's this consumerization of the enterprise. So, I think the key is when you look at consumer versus enterprise, we want to build profitable unit economic positive companies, and those can be consumer and enterprise.
Thank you for being here. We'll see you again soon. Great. Trey Vassallo, again, joining us from Defy. Coming up, final thoughts with Costello and Bain next.
Is the monolithic view of emerging markets obsolete? Christmas. A time for celebrating, unwrapping, and unwinding. Capture every moment with an epic iPhone 6s with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
Hey, can't watch the big NBA game because your life's just too busy? I've got some news for you. TuneIn Premium is the answer to all your problems. Hear every home and away game live or on demand everywhere you go. Just search NBA to listen.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, hook, into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow and TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Hey, NFL fan, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can listen to every NFL game live as it's happening.
LaShawn McCoy has an opening on the right side, punches into the end zone for the touchdown.
Or catch it later on demand.
Offset backs behind Mahomes. The give is to Williams. Starts right, cuts it back to the left, and blows into the end zone for the touchdown.
You call the plays. Follow the NFL anytime, anywhere, all season long with TuneIn Premium. Upgrade today. Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted.
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown.
Search NFL today.
Welcome back. It is Fed decision day tomorrow. The Bond King, Double Lines, Jeffrey Gundlach will join me in a CNBC exclusive on the halftime report. I'll head to LA in just a few minutes, and we'll look forward to doing that. We'll talk about the markets and what he can expect in 2020. Let's wrap up our final thoughts with you guys. And you were just telling me about consumer versus enterprise.
You know, we've been talking about during the show the fact that there's not a lot going on in consumer right now, or at least you're not seeing it in the private markets. I think one thing people should realize is 6-7 years ago, you're a consumer tech CEO, you're an enterprise CEO. It's kind of the same job. You're running a tech business. You know, today, if you're running a consumer business, you better be ready to testify in front of, Congress. And that's not a world that most people who are technologists and start companies are ready to live in or want to live in. I think there may be a little bit more reticence to wow, do I really want to go down that path and be the one called in front of Congress and be made, someone once asked me, because I had spent some time when I was running Twitter in Washington, and they were asking me, look, I'm about to get called in front of Congress. Do you have any tips? And I said, look, when they call you to testify, you have two choices. You can look stupid or you can look complicit. Go with stupid, and because, it's kind of a show that they're putting on. And I think that's probably causing some people to say, I'm going to go down this path of building this company that I can build in the background and
like Larry
and do just as well. I mean, I wouldn't be surprised if that had something to do with it. If you're Larry Page and I'm being I built this thing and I built it a long time ago, and here's how I thought about it, and I created all this value and hired all these people, and now I'm being Elizabeth Warren's telling me that I'm going to be she's going to hold me, she wants to come in front of the Senate and answer her questions. I just don't think a lot of these people want to live that life.
The other thing you told me is that you're literally having dinner tonight with Jack Dorsey.
Yeah, well, I was having dinner tonight with Jack after I said that he's probably having a conversation with the board about moving to Africa. Well, we might just be going out to the taco truck. We'll see what happens.
Guys, it's been fun. Thanks so much.
Thanks for having us.
Yeah,
Adam Bain, Dick Costello. The exchange begins now.
Scott, thank you very much. And welcome, everybody, to The Exchange. I'm Tyler Matheson. Welcome to a Tuesday edition. Here's what's ahead. A Fed meeting, a trade deal, impeachment articles, a tariff deadline, lots of headlines out of Washington this hour. Has the market searching for direction? We'll tell you where we stand, what could be next, and how to play all the volatility. Plus, believe it or not, there is something out there that may actually save the malls. We'll look at what it is, or maybe who it is, and the names that could benefit. Plus, an exclusive and rare look at how the SEC monitors insider trading and fraudulent activity from their enforcement and forensics labs. But we begin with today's markets and Dom Chu, who has the numbers. Dom?
All right, so Tyler, it's been a whole lot of nothing in terms of what's happening right now, but there has been some volatility intraday. You can see here just about flat for the Dow, just about flat for the S&P, and the NASDAQ is up a whopping 0.1%. But at one point today, the Dow Industrials were up 39 points, but down as much as 105. Now, on a percentage basis, not a lot, but you can see trade headlines kind of moving those markets along. One place we are keeping a close eye on remains the financial sector overall. Check out this particular ETF that tracks financials. Again, flat for the day, but we are right now hovering at a level that's right near a 52-week high. So again, some decent moves there and a nice trend higher for financials, picking up some steam over the last couple of months. And we'll end here on the stock of the day. AutoZone in the zone right now. You can see there, those shares up 7%, one of the best performers in the S&P 500. The auto parts retailer comes out with better than expected profits, sales, and sales growth at established store locations. So, Tyler, those shares have been on a steady climb all throughout the year. A lot of folks do it yourself in it when it comes to maintaining their cars. Ty, back over to you.
All right, Dom, thank you very much. And we begin today with the very latest on the trade and tariff front. Lots to tell you about. Kayla Tausche live in Washington following all the twists and turns, and they are many, Kayla.
Tyler, after a suspenseful 24 hours, Democrats in the White House reached a revised deal on USMCA that will see the three countries sign momentarily, and a full House vote will take place next week. Among the changes in the new agreement, on-the-ground inspectors will report back on Mexico's compliance with new labor laws. The deal also removes a 10-year period of exclusivity for biologic drugs, allowing generic competition sooner. The announced agreement came less than an hour after House Speaker Nancy Pelosi announced two articles of impeachment against the president. Pelosi was asked if President Trump is not fit for office, why support his deal? Here's what she said.
I would say that we came a long way from what he originally proposed. And there are some people who said, why make it look like he has a victory? Well, we're declaring victory for the American worker in what is in this agreement. But we would never, not any one of us is important enough for us to hold up a trade agreement that is important for American workers because of any collateral benefit that might accrue to any one of us.
The International Trade Commission in April estimated a deal would add 0.33% to U.S. GDP after 6 years, but certainly a bigger benefit than if NAFTA were to fall apart. Tyler?
Kayla, what can you tell us on the tariffs that are supposed to go into effect on Sunday, December 15th? Are there any smoke signals here at all?
Well, certainly the administration's official line has been that the tariffs are on until they aren't, but there have been increasingly bullish signals from administration officials in recent days. Just yesterday, Agriculture Secretary Sonny Perdue at a conference says that it was his belief that they would not be implementing the tariffs and that the U.S. would be backing away. This morning, Larry Kudlow at a separate conference said that he could not confirm that the tariffs would in fact be delayed, as the Wall Street Journal was reporting, but that if there was enough progress, that potentially a delay could happen.
All right, Kayla, thank you very much. Kayla Tausche in Washington following trade as she has so brilliantly over these past months. Let's dive deeper now into the possible tariffs delay, the agreement on the USMCA and the markets. Joining us are Chris Zaccarelli, Chief Investment Officer at the Independent Advisor Alliance, Brian Railing, co-head of Global Fixed Income Strategy at the Wells Fargo Investment Institute, and James Lucier, Managing Director at Capital Alpha Partners. James, let me start with you and get your thoughts on the possibility that the tariffs may be postponed December 15th, the possibility that there may be some kind of skinny deal or not. How are you handicapping it?
Well, I'm giving about 50% odds that the tariffs are postponed, but that we don't see a deal. I think that the signals from the administration are pretty clear. Also, we're getting signals from the Chinese side that they do not expect tariffs to take place. But there's also a lot of signs that the negotiations are slowing down. So I think the most likely scenario is no tariff for the time being, but also no trade deal. They'll probably postpone the tariff for 30 days or so into the beginning of the next year. And at that point, I think we're just going to be guiding the market down slowly. No trade deal, but perhaps it's not such a big deal if we get USMCA done and if we also see U.S. and China trade relations stabilized at a new equilibrium.
Chris Zaccarelli, no trade deal, no new tariffs. What do you think that will mean for the markets?
Well, I think, really what matters is if we get those tariffs implemented or not. If the tariffs are implemented, I think you could see a pretty big pullback in the market, at least 5% or more. If they're not implemented and the can is kicked down the road, I think that's, all things being equal, pretty good for the markets. We'll probably see markets drift higher. So I actually think it's a slight positive if the tariffs are postponed, but it would be quite a negative if they were implemented this weekend, which is why this week is so important for the markets, both to the end of this year as well as setting the tone for the beginning of next year.
James, let me just go back and button up one other thing. Obviously, they're the December 15th tariffs that would apply to a variety of goods, including several in the sort of more consumer category of goods. But there were predecessor tariffs on a host of imports as well. Do you expect that those tariffs will stay in place for the foreseeable future? And is that the kind of new reset that you were describing in your first answer?
Well, we actually have 4 lists of tariffs all the way up through list 4A and B. The most the nearest range of tariffs is the 4B, the December 15th tariffs. I think those are likely to be suspended. I think the trade talks are turning on whether or not the administration is willing to also release the 4A tariffs. That would be 15% tariffs on about $110 billion worth of goods that took effect in September. So it's that last round of tariffs that we're talking about, possibly holding off on the December tariffs, possibly trading the September tariffs for some kind of ag-focused trade deal. But the others do stay in place. That's the new normal. And they will stay in place until we get a more comprehensive trade deal with either President Trump in 2021 or a Democratic president in 2021.
Brian, as our fixed income designate here, put a big red ribbon on all of what you have just heard. And specifically, my question is, if what James talks about does come to pass, and some tariffs stay in place, what is the economic impact? Does it slow the American economy such that the Federal Reserve might be more inclined to lower interest rates as we turn into 2020, though maybe not tomorrow? What do you think?
I don't think so. I think status quo is just fine for the markets. They can grind higher. The only way the Fed, I think, really comes into play in terms of a potential cut is if there is a meaningful increase in tariffs. And that clearly, I think, would have the potential to slow the economy next year.
So what is your forecast then for interest rates next year? Basically within a band roughly where they are now, maybe a quarter point lower, maybe a quarter point higher. What are you saying?
Yeah, we look for a pause here, potential for the Fed to come in next year and maybe fine tune a little bit. But if they do, we think it will be in terms of lower, not higher.
Chris Zaccarelli, markets into 2020. Obviously, there's a lot of uncertainty, but we enter every year with a lot of uncertainty. There's Brexit, there's trade, there's interest rates, there's elections, there's a possible impeachment. What should investors do?
Well, right now, you really want to see what's going to happen this weekend. In general, I think investors have to look to all the good economic news that we've had recently. That jobs number on Friday was fantastic. GDP revised higher. Most recently was also good. So all things being equal, the economy is doing well. Job market is strong. You want to stay in this market and not make any rash moves. However, if things fall apart on trade, that would be a big risk. So for that reason, I'd continue to do what you're doing and look for those opportunities. If there are pullbacks, you may want to reassess. But for right now, I would stay the course. I would not make any rash moves based on what's happening in the near future.
All right, the law firm of Zaccarelli, Railing, and Lucier, we thank you all very much. We appreciate your time today, gentlemen.
Thanks, Tyler.
You got it. We got a news alert in the bond market as 10-year notes go up for auction. Rick Santelli tracking the action at the CME. What's the demand, sir?
Well, demand at straight up 1 Eastern. I gave a C+, Charlie plus, and let's go through it. This is the second time these 10-year notes have been up for auction. The first time was November 6th, so it's the first reopening. The yield at the auction, 1.842, right in the middle of the when issued market. When issued was 184.5. Offered at 184, so a price tight, 2.43 bid to cover. Basically, that is the 10 auction average, 56.1. Tyler on indirects is just a smidge light, weakest since August of this year. But here's the money ball, 19.4% on direct. So all the big institutions, pension funds, they lined up. That's the best since May of 2015. So we end up walking away with a C+. Tomorrow's 30-year bonds. And remember, this $78 billion in supply settles on Monday, the 16th. Tax day as well. Remember that tax day in September that caused the beginning of all the liquidity issues. So we want to make sure our eyes are really to the screen on Monday when this auction settles. Back to you, Tyler.
All right, Rick, thank you very much. Good to see you. Thanks. And here is what else is ahead on the exchange.
Coming up, an unlikely warrior in the battle to save the dying malls. Plus, a widely followed analyst cuts Netflix to underperform and predicts big subscriber losses. And Old Navy has a new partner when it comes to delivering your last-minute holiday purchases. This is The Exchange on CNBC.
Through the AT&T network,
Ah, Christmas, a time for sharing gifts and laughter, and photos and videos. Make the most of it with a SIM-only deal packed with data from Tesco Mobile. Like a 10-gig SIM for just £13 a month. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile today. Tesco Mobile. Every little helps.
Ends 29th of December. 12-month contract and unlocked 4G-enabled phone required. Terms apply. See tescomobile.com/terms.
Make their Christmas wishes come true. Whether they love Disney's Frozen 2, want to jet off on Barbie's dream plane, or ready up with the Fortnite Battle Royale collection. At littlewoods.com, you'll find all the toys they love, all with inclusive delivery and free returns. Own Christmas. Shop now at littlewoods.com.
I've always loved a kitchen experiment, especially smoothies. I've blended all sorts of mad combinations. Strawberry and charcoal, broccoli and chocolate. Not my best, that. But when I test blenders in the Witch Lab, it's not about flavour, it's about performance. Our tests use proper tough stuff, hard ice, strong veg, rough nuts. And the blenders that can hack it are the only ones we recommend for your kitchen.
Which tests harder so you can buy smarter. Visit which.co.uk.
Millions of people are missing out by having a current account that doesn't pay them any interest on their hard-earned money. TSB offers interest to all their Plus account customers for no monthly fee. Plus, you can stop your friends and family missing out by recommending the Plus account to them. And when they switch, you'll both earn £75. Search online or visit your local branch. Terms and conditions apply.
My name's Ian, and I run the Christmas Centres for Crisis. Many people in Britain are homeless, stuck in hostels, sleeping on floors, even on the street. You can change this. Our Christmas Centres provide people with food, safety and support, and show them how Crisis can help them find a home and a job in the year ahead. You can reserve a place at Crisis this Christmas for just £28.87. Search Support Crisis Reserve and help someone take their first step out of homelessness this Christmas. Thank you.
In the stock market and in life, everything can change from 1 minute to the next. Be the first to hear the latest money news and market trends with CNBC on TuneIn. Wherever your day takes you, listen to CNBC's full slate of programming, including shows like Fast Money, Squawk Box, and Mad Money with Jim Cramer. And when the next big business story breaks, CNBC lets you know with live updates and commentary. At the office, at home, or on the go. Search CNBC on TuneIn to listen.
All right, welcome back to The Exchange. A new report out suggests that teens could be trading in time on their phones for time at the, I don't believe this, the mall next year. Diana Olick is, I don't know where Diana Olick is. It's an unusual place. It's a mall in Philadelphia with more on that story. But you got to tell me, where are you standing?
Well, where else would I be, Tyler? I'm in a marshmallow pit with 250,000 fake marshmallows.
They're
right?
very nice.
Because where else would I go? Right. So apparently teens are coming back to the mall, and developers are enticing them, yes, with this, but with more than just marshmallows. This is Candytopia. It's a sugar fun house inside Philadelphia's new Fashion District Mall. Now, retail REIT Crete sunk about $400 million into redeveloping this downtown mall, which also has several Instagrammable art installations, a bowling alley, movie theater, and of course, teen apparel stores. Now, why? Because 81% of teenagers say they prefer shopping in actual stores. That's according to CBRE. Now, Gen Z's spending power increased to $143 billion this year, and teens influence $460 billion in spending.
All right. Well, that is an amazing fact. How are you reading your notes down there? What is that, on a BlackBerry?
No, unfortunately, we were supposed to go to a soundbite right there of the CEO of Crete. I guess that's what I thought. That's why I was waiting.
That's why there was the awkward pause. But tell me about the awkward position.
The CEO had a lot to say.
How comfortable are those marshmallows?
The awkward position is, look, they're putting in all this entertainment stuff to try to get kids to come into the mall because they have so much spending power. So you have this, which is Candytopia. They have candy artwork, and I've literally seen 100 kids come through here. In the first 2 months this mall opened in September, they had 2 million potential shoppers here. The CEO says you just have to reimagine what it is you see as the retail mall, and people will come.
That is really what's happening. As you may well know, there's a place called American Dream, not far from where we are at headquarters here, right near MetLife Stadium. That is maybe the largest footprint mall in the United States. But it is all about the experience.
Slope, right? But they don't have marshmallows.
I know, they don't have marshmallows. So. They've got roller coaster, ski slope, but it's all about the experience. Diana Olick, thanks very much. Roast a couple of those for me. It's not just REITs looking to cash in on teen spending at physical shopping centers. Retailers also stand to gain from the mall renaissance, if we can call it that. With us now, Susan Anderson, Senior Vice President and Senior Equity Research Analyst at B. Riley FBR. Susan, are malls going to make a comeback? Is that your view?
Well, I think it's still going to take a while. We still have to see a lot of rationalization. But when you look at the A malls, the B plus malls, maybe even the B malls, they are figuring out ways to get consumers back in the door. And with this teen cohort now actually wanting to go to the stores, it could make it easier over the next 5 years. Teens want experiences, it would seem to me, number one. Number two, they like the social aspect of going out with their fellow teens, maybe bumping into others and hanging out, right? Because these places are not just shopping places; they're dining places. They're places where you just go and have a few laughs. Yeah, correct. And this is nothing new, right? We saw the rise of the mall back in the 80s, and it really was centered around the teenager where it became a hangout for them. And I think that's coming back with the Gen Z generation. The millennials stepped away from it a bit as I think online shopping was so new to them. But with the Gen Zers growing up with online shopping, actually going to the mall is an experience, and they want to be social like any other teenager, and it's a perfect place to do it. What stores or brands are best positioned in this kind of environment to take advantage of the traffic that we're describing here? Yeah, so we've actually seen some pretty decent performance out of the traditional teen brick and mortar retailers such as American Eagle or even an Abercrombie. We prefer American Eagle as we see them as the best in class teen retailer. They've been actually comping positive for several years now. They have the growth format Aerie, which is growing teens right now. They also have been ahead of the game in omni-channel. Their online penetration is as much as 30%. So we think they're really best positioned to take advantage of this new teen consumer. Does this mean necessarily that these Gen Z folks are not going to be online shoppers, or that they are coming through a phase where they're not online shoppers, but ultimately they will be more? I think they're blending both. I think that they are a little less likely to shop online, but when they're in the stores, they utilize their phone a lot to check prices, to check trends, to text their friends a picture of what they want to buy. So I think they're blending the two together more than any other consumer base out there. All right, thanks very much. We appreciate it, Susan. Thank you for your time. And coming up, it has been a mixed year for retailers, but this stock is crushing it, up 8% today and up nearly 60% so far this year, despite a very competitive market. The name and what makes it stand out from the crowd ahead. Plus, Nike striking out with Major League Baseball fans, or at least some of them, after unveiling next year's uniforms. They've got the contract to make them. A look at why the new design is causing such controversy when the exchange returns in 2 minutes.
As a principal, I can tell you this.
This week at Tesco, buy 2 items from our chilled party food range, like tempura prawns or mozzarella sticks, and get a third one free. So for every 2 people you invite, you can ask another for free. But who? Linda from Accounts or Julio from Magaluf 2010. Tesco, delivering Christmas for 100 years. Cheapest item free, selected stores while stocks last, ends 1st of January.
Mate, this van's suspension is rubbish.
Tell me about it.
Even the radio's had it.
I know, but I'd get nothing if I scrapped it.
Actually, you can get at least £2,000 off a new Ford for it.
You're kidding.
With Ford's new for old scrappage scheme, you can get between £2,000 and £6,250 off a new Ford van if you scrap an eligible vehicle with us responsibly. Also, there's 0% APR representative on Ford Acquire. Ford Commercial Vehicles, backbone of Britain. Search Ford Scrappage. Exclusions apply. Contract and registered by 31st of December 2019 at participating dealers. Agent ownership criteria apply to scrappage vehicle. Subject to status. Free post full credit. Deposit restrictions apply.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow and tune in on Facebook, Twitter, and Instagram to get the most out of TuneIn.
NFL fan, can't watch the game? Can't be there? We got you covered. With TuneIn Premium, you can listen to every NFL game live as it's happening.
LaShawn McCoy has an opening on the right side, punches into the end zone for the touchdown.
Or catch it later on demand.
Offset backs behind Mahomes. The give is to Williams. Starts right, cuts it back to the left, and blows into the end zone for the touchdown.
You call the plays. Follow the NFL anytime, anywhere, all season long with TuneIn Premium. Upgrade today.
Welcome back to the Exchange, everybody. Here's some of the movers this hour. Shares of designer brands down 17% after missing on earnings and after cutting its guidance for the future. The parent of DSW blames higher promotion and shipping costs, as well as tariffs, for the shortfall there. Shares of Sanofi up more than 6%. This on news that the French drug maker plans to stop its diabetes and cardiovascular research to prioritize treatments for cancer and other segments where it is performing well. Shares of Toll Brothers down 3% despite a beat on the top and bottom line and a current quarter outlook that is above estimates. Analysts cautious on margins moving forward, including a sustained drag in high margin markets like California. Let's go to Sue Herrera for a CNBC News update. Hi, Sue.
Hello, Ty. Hello, everybody. Here's what's happening at this hour. House Republicans reacting to Democrats introducing 2 articles of impeachment against President Trump. House Minority Leader McCarthy continues to support the president.
So, no, it is not difficult to defend this president because this president did nothing that's impeachable. It's hard to defend Democrats on how they're running this House and what they're doing inside their majority. That's the difficulty that I have.
Thousands of union activists marching through French cities to demand the government scrap upcoming changes to that country's national retirement system. Paris deploying thousands of police and ordering shops and restaurants closed along the march route. And there is a new E. coli outbreak linked to Fresh Express sunflower crisp chopped salad kits. According to the FDA and the CDC, the outbreak has sickened 8 people in Minnesota, North Dakota, and Wisconsin. 3 people have been hospitalized, including one who developed a type of kidney failure. So check your refrigerator. That is the news update at this hour. Ty, I will send it back to you.
All right, Sue, thank you very much. And here's what else is coming up on the Exchange.
Ahead, how Stitch Fix managed to stitch together big gains this year. Is Netflix in for big subscriber losses? An exclusive look inside the SEC's enforcement room. And why The Economist is calling 2020 judgment time. It's all coming up on the Exchange.
Hi, I'm Barry Sloan with NewTek, your business solutions company.
Something explosive is coming to the home of rugby. When Harlequins meet Leicester Tigers, expect fireworks. With tickets from £17 children and £27 adults, Big Game 12 is more than a Gallagher Premiership rugby fixture. It's London's biggest rugby party. Enjoy music, entertainment and a truly incredible atmosphere before the big game kicks off at 4:30pm, Saturday 28th of December at Twickenham Stadium. Go to tickets.quins.co.uk or search Big Game 12.
Give someone you love a Christmas present they simply won't believe. The full-blown treatment of the Dyson Airwrap Hairstyler from Curry's PC World. It streams warm air to sculpt hair into great waves and voluminous curls. Make yourself extremely popular. Give the Dyson Airwrap Hairstyler and make anyone's Christmas. Plus, spend £25 or more to get a £5 voucher and a chance to win a £1,000 gift card at Curry's PC World. Voucher valid on purchases £25 and over. T's and C's apply.
Start hearing more of what you want. Upgrade to TuneIn Premium and get over 45 commercial-free music stations, live commercial-free news, and every live NFL, MLB, NBA, and NHL game. Visit TuneIn.com/premium to upgrade.
Along the goal line, Martin scores! He tucks it home! Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
And you can hear the action live on TuneIn Premium.
Gonna move, hit a shot, and he scores!
For regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app and see the latest edition under the Your New Episode section. Happy listening.
From ESPN and the award-winning producers of The Sterling Affairs comes the latest season of 30 for 30 podcasts. 4 brand new stories of espionage.
He wanted this team to be the Barcelona of women's basketball.
Resilience.
I started to scream. I tried to get away.
Corruption.
It's the culture of win at all costs.
And rebirth.
How will we ever rebuild it?
30 for 30 Podcasts, Season 6. Listen and favorite 30 for 30 podcasts on TuneIn.
All right, let's catch up on a few stories that should be on your radar. It is time for Rapid Fire. Here with their takes are Bill Griffith, Rahel Solomon, and Robert Frank. Topic 1, shares of Stitch Fix jumping today after beating estimates for Q1. The online personal styling service saw active clients jump 17% year over year. Revenue per client spiked 10%. CEO Katrina Lake joined CNBC for an exclusive interview and talked about how it meets the needs of today's retail consumer.
I think the world wants a more personalized offering. I think the days of retail saying, like, this is the it thing and everybody should go buy it, those days are gone. And today people want to be treated like unique individuals and they want to be respected for their preferences. And I think our model is really well suited to deliver against that.
All right, the stock has been stitching up major gains this year, up nearly 60%. Who wants to jump in?
However, I would take the other side of that trade because if you look deeper into the earnings report, cash flow has been cut in half.
Yes.
Operating income, did you see that number? Operating income down 99% year over year.
Cash flow down 46%.
Meaning their expenses are going up, meaning the cost of acquisition of these customers is still going up, and that can't last forever.
They've also made a lot of investments this last year. They've expanded into the UK. They've expanded their kids' business. They're expanding their men's business. One thing that we are seeing that is working well, they're direct-to-buy offerings, such as Shop Your Looks, where essentially what they're doing is right now what you would do is you would get 5 items picked for you based on their data science and their algorithms, and you could decide if you wanted to buy something. Shop Your Looks, right now it's available to 1/3 of their women clients, and based on that data, they're giving you 30 to 40 more options, and they're seeing it's really successful, as opposed to if you shop on Old Navy or Target where you have thousands of options. It's 30 or 40 options.
They curate it to you.
For you, and it's working really well.
I mean, one of the things I noticed here, to your point on the numbers, is that while they beat estimates, they made no money. Right. In other words, they expected a loss of 6 cents a share and they hit 0.
Right, and a lot of that is investment. Now, the bull case on this, which I actually believe in this case, is they have in some ways found the promised land of retailing, which is they know each of their customers, the style, the fit, the budget, the preferences, all of that rich data. I mean, the number of questions that they ask of their customers is data that Amazon or most retailers would kill for. Right. And so the question is, can you scale that rapidly enough to start truly making money? They are in an investment phase, but if they can really start scaling and they have that much data on those customers, they can start selling them things that they're recommending, that could be great business.
It still feels gimmicky to me. I don't know. I must be missing something. No, I'm serious. I mean, the novelty is very powerful.
It's a data firm.
It's that, but you're applying science to an art.
Right.
Dressing yourself is an art. It's not a science. Give me a break. Come on.
Yet, as a woman and as a millennial, the shopping experience feels daunting, right? So I'm not a Stitch Fix consumer, but I can certainly understand the appeal of this. Not having to shop, but based on what I have shopped for in the past and based on my answers to certain questions, you telling me what I would probably like.
I'll bet their returns are high. I don't know what they are.
But don't you want to go
touch it, feel
it, see what it looks like on you?
To be honest, no.
Really?
And to be amongst millions
By the way,
of
you're
people,
a great dresser.
Absolutely
It's working for me, man. That's lovely. All right, let's move on to shares of Netflix. Wear that while you're watching Netflix, okay? Lower today after being downgraded to underperform at Needham. The analyst Laura Martin projects the streaming giant could lose up to 4 million U.S. subscribers next year as it faces growing competition from the likes of Disney and Apple. Martin recommended Netflix add a lower-priced membership option and also use ads to help boost profits. She's making a case here that they are getting undercut on price.
Yeah, please, Netflix, do not do advertising.
Please.
I mean, that is the number 1, 2, and 3 reason that I subscribe to networks is because we don't have to watch the ads. Now, she does have a point about price, but I just don't know that you would either not lose so many subscribers or you would gain that much by going down, let's say, $3 or $4 a month. I think the key for them, as everyone else, is just having better content.
And I think they're starting to get legitimacy as a content creator, right? We just heard last week that they're now getting Golden Globe nominations.
The most Golden Globe nominations of any producer.
Yes. By the way, and HBO was second. HBO, second to Netflix. Right. So I think they're gaining legitimacy. So I think it's interesting to hear this case now that they should be cutting their prices as they're starting to gain that credibility.
If I were an investor, but I'm not, I would bet the jockey in this case. Reed Hastings is one smart dude, and he's brought this company back from the brink again and again and again. I'm not too worried about Netflix.
Yeah, remember when they weren't the red box, but you used to get
something
this
like
in the mail,
they
right?
started out,
that's how you started.
Yeah, exactly.
And he
they
made
were,
a big
They were
bet.
competing with Blockbuster.
Yes.
Whatever happened to them?
What?
Remember them? Yeah. Right. All right, let's move on. Don't miss the analyst behind that bold call on Netflix. Her name is Laura Martin, and she'll be on the closing bell today in the 4 p.m. hour. There she is. All right, then this, Old Navy, going back to retail, teaming up with Postmates to help with last-minute holiday shopping deliveries. The retailer announced that between December 21st and the 23rd, it will offer free same-day delivery through Postmates to online customers across 4,000 cities. It has been a rough year for Old Navy's parent company, Gap. The shares there down more than 30%. That, in part, is why they're making a move to separate.
After the Stitch Fix commentary, this has your name written all over it.
Well,
You need yoga pants and a snap belt.
Wait a minute. They're just now announcing this deal with Postmates. Shouldn't this we have known about this before Black Friday? I mean, this feels like a last minute. Oh, maybe
Here's a good idea.
Maybe we could get it delivered on the same day or within 24 hours. Well, ho hum, welcome to the 21st century. I don't know. I applaud their initiative. I think it's a good idea. I just think they're a little late to the game, obviously.
These are two companies that need help right now.
Absolutely.
And whether they're the solution or whether it's just a temporary Band-Aid. Now, it's only for 2 days that you get it for free, December 21st through 23rd.
Oh, I didn't even sense that.
Every other day, it's $8.99, which, by the way, for the type of budget shopper that goes to Old Navy, are they going to pay $8.99 for delivery same day? I don't know.
That's a really good point because I think most of the things at Old Navy, flip-flops,
are probably $8.99.
Probably.
That's a T-shirt right there, man.
Too much choice for you, though.
Yes, I'm all out. I'm all out.
All right, let's go next up. Shares of the online... Oh, we're going to have some pet pictures
here they come.
Of the online pet supplier Chewy are higher despite missing estimates for the third quarter. The company reporting an adjusted loss per share of 20 cents and only beat revenue estimates by a hair. A whisker.
This is going to feel like the Loved Ones episode of Survivor.
Yes, that's right. Here we go. The pet care market booming. Spending expected to hit a record $75 billion this year, according to industry estimates, and that would break a previous record of $72 billion set just last year. What do we think here?
Where are the pictures of our children?
Should we look at our children?
I thought that's what we were going to do here.
Whose picture is first? We got to
let's see. Those are my knuckleheads.
Those are your dogs. Who's which?
That would be Nick on the left and Nora on the right. And yes, for you old movie fans, Nick and Nora, you get that. People of a certain the Thin Man series.
Yes,
Nick and Nora Charles.
We're going to have another movie illusion when my
cats
come up, and that is yours, right?
That is my teddy bear, Solomon. He's a little golden doodle.
Oh, so cute.
You can see his little toy beside him too, which is pretty much everywhere.
Did you get that from Chewy?
No, actually, we do get his pet food from Chewy, but not his toys.
All right.
But yes, that's teddy bear.
And Robert?
Oh, no, that's more teddy bear.
That's never enough.
Teddy bear hog in the air.
That's Thor.
Wow.
That's Thor.
That's
Yeah, that's Thor. He's my
bushy
only
cat.
He's a bushy cat. He's sort of the Fabio of cats. Great looking, but not a lot upstairs.
And I love how you get a photo credit there. Source Robert Frank.
I love that.
All right, now here come our two cats. The movie illusion here is my son was going through his Spider-Man phase where we got these cats. And so the cat on the right is the male. That is Peter Parker.
Oh, good.
The cat on the left is MJ. So
at least he didn't go for Green Goblin, right?
They didn't go for Green Goblin.
How do you even tell them apart?
He really, it's a long story. But the one on the left once spent 8 hours tucked in under the hood of my car here. got outside
at
CNBC. At CNBC. At CNBC. Drove 19 miles.
Oh my God.
In my car.
Oh my Lord.
I'm listening and I'm hearing meowing on the other side of the
I wonder he's named
dashboard.
after a superhero, right?
And I pull over on Johnson Avenue. I get out. I'm tearing the cowling off it, and there is the cat. The cat's head. And it's peeking out this little aperture. You got to stick with this story, folks. A woman comes over to help me. I'm pulling. She says, pull. She was like my midwife. I'm giving birth to this cat. Up it pops. The only thing that happened was she got a little burn on the top of her head, so she has a white blaze or streak on the top of her head.
That's a tough cat.
She used about 8 of the 9 lives. All right, Nike striking out with...
Anyway, Chewy's a nice company.
Yeah,
we like Chewy.
Yeah. We began there, we left them.
Proving that we all love our pets way too much.
Nike striking out with baseball fans, or at least some of them. Many are outraged because our default response in America today is outrage over anything about the company's new design jerseys for the MLB. They are up in arms, these aggrieved fans, because the new design will feature the Nike swoosh prominently on the right front shoulder. Some fans are accusing MLB of selling out. Well, I think that's probably right.
They would agree with that.
I would say that's probably true.
We needed money. Nike had the money.
Nike is ruining baseball.
Ruining it. The most ardent Major League Baseball fan that I know is Mike Santoli. And I emailed him. I asked, what do you think of this thing? And he sort of shrugged his shoulders and says, well, he'd rather not this happen, especially on Yankees jersey, which has been clean all these years. But as he said, this is probably a good time to quote Jerry Seinfeld, who says, with players moving from team to team so often, you find yourself rooting for the jersey most often. So we're just screaming about laundry right now.
They should put it on the sleeve.
I think it would be better on the sleeve. I agree with you on that.
And the cardinal looks weird because it looks like there's a little stick above the cardinal.
Oh, is that right?
The cardinal head? Yeah, it's a little daunting.
But even if they put it on the sleeve, Twitter would still be...
They hate everything.
I just fear that they're opening the door to something more, and just so that Major League Baseball uniforms don't end up looking like NASCAR drivers.
Yeah.
Right?
Well, this is what's begun. Well, obviously, you go to European soccer, it's all about whoever the sponsor is of the team.
Right.
In the NBA now, most teams have some sort of blaze on their jerseys.
Soon it'll come to business news anchors. That's when we'll start having the...
Yeah.
This album is sponsored by Stitch Fix.
Chewy, right across the front.
Folks, thank you very much. That was all too much fun.
Wasn't that, though?
Yeah, all right.
I'm glad your cat made it, though.
Yeah, this cat, I'm telling
amazing.
you. All right, folks, thanks. The SEC recently announced it assessed more than $4 billion in fines and disgorgements in 2019. We'll get an inside look at where the action happens in the SEC's Market Watch enforcement room. That is next.
Right now, instead of hearing this, you could be listening to the music that keeps you moving with TuneIn Premium. Find today's biggest songs and all of your favorites commercial-free. Visit TuneIn.com/premium to upgrade.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown.
Search NFL today. Want TuneIn to remind you when the big NFL game is about to get underway? Be sure notifications are allowed on your phone and search NFL on the TuneIn app. Find the game you want to hear under events and tap Notify Me. We'll let you know exactly when it's time to listen in for kickoff. Hey, NFL fan, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can listen to every NFL game live as it's happening.
LaShawn McCoy has an opening on the right side, punches into the end zone for the touchdown.
Or catch it later on demand.
Offset backs behind Mahomes. The give is to Williams. Starts right, cuts it back to the left, and blows into the end zone for the touchdown.
You call the plays. Follow the NFL anytime, anywhere, all season long with TuneIn Premium. Upgrade today.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Far wing, elevates, triple bucket.
The roar of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut
the
it.
Sideline, the man leads for 3.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now, hear it live on TuneIn.
Fake in the lane, turnaround jumper from 8 feet is good on the
Search
right block.
NBA Today to start listening.
The SEC's enforcement room is where officials monitor insider trading and fraudulent activity. CNBC's Bob Pisani is there in Washington. Joins us now with a rare look behind the curtain. Hi, Bob.
Hello, Tyler. Scammers and fraudsters and insider traders and Ponzi schemers and stock spoofers. The SEC sees it all. This is the Market Watch trading room where they monitor a lot of the trading activity. Now, a lot of the market surveillance is actually done by the exchanges and by FINRA, and suspicious activity is referred here to the SEC where they actually do the investigations. So detecting illegal trading is a very large part of the activities here. This year, for example, the SEC sued over 24 Chinese traders for manipulating the prices of over 3,000 stocks. There's all sorts of things going on all the time like this. It's not just trading fraud that the SEC is monitoring. There's dozens of actions by companies that are reporting false or inaccurate financial information.
If you look at just the last fiscal year alone, we brought a number of substantial actions against large public issuers. For example, Facebook, in which they paid a $100 million penalty. We brought an action against Nissan, in which they paid a $15 million penalty, action against Mylan, action against Fiat Chrysler. We also brought a litigated action against Volkswagen.
And there's a lot more that they're doing as well. There were cases on fraud in digital assets and unlawful promotion of initial coin offerings, or ICOs. 95 investment firms were forced to pay $195 million to return to mutual fund investors for charging excessive fees, among other things. They even get involved in cybersecurity issues. So, for example, they forced the Options Clearing Corporation, this is the only really clearing agency for exchange-listed options contracts, they forced them to pay a $15 million fine because they weren't doing adequate financial risk management and system security. So there's a lot on the plate here. Altogether, the SEC brought more than 800 enforcement actions last year. They got judgments and orders totaling more than $4.3 billion in disgorgement and penalties. They returned $1.2 billion to harmed investors last year. Now, coming up in the next hour, this is my favorite part of the whole day. SEC Chair Jay Clayton is going to speak with us on his efforts to protect retail investors. But then we're going to go inside the SEC Forensic Lab. This is the most highly secure room at the SEC. This is where, guys, they take apart the cell phones, they take apart computers that they've seized from people they suspect of illegal activities, and they basically try to reconstruct exactly what they have been doing. Fascinating look, and they've given us access to it today. We'll show some of it to you a little bit later on. Guys, back to you.
What are the folks behind you actually looking at? It looks like they're looking at news feeds, Bob, or what? Can you tell us?
Yes. Well, what's happened here is the actual, again, the daily monitoring of the trading activity takes place generally at the exchanges and at FINRA. If FINRA sees something suspicious, they forward it here for investigations. That actually takes place in the rooms that are around us here where the actual investigations occur. Here people come in and actually do basic research and monitoring stock trading during the middle of the day. So a lot of this, of course, is not necessarily anything that's secure behind us. They just come in here and have conference rooms, meetings around the things that they're investigating in the rooms around us. So yes, they're not actually accessing